So good morning all of you. I hope you all are doing good. Good morning to all of you. Pay attention please. Shall we start? Good morning all of you. Shall we start? So good morning beta. So let us start with one ICDS first of all today. Let's look at this ICDS and then we'll go ahead. This ICDS, that is Income Computation and Disclosure Standard, which talks about borrowing costs. You also have a similar ICDS in your accounts also. In financial reporting, you have a similar ICDS on borrowing cost, right? Right. Please switch on your videos, please, all of you. Okay. Now, what is borrowing cost exactly? Borrowing cost means a loan or a similar cost. If you take a loan, if you incur interest on that loan will be called as, that interest will be called as the cost of borrowing. Okay. Now, the loan can be taken for two purposes. Listen carefully. One loan can be taken directly for an asset. And one loan is not directly taken for the asset, but it is a general loan. Okay. For example, this is my balance sheet and there is a loan over here of 50 lakhs. Now, I have taken this loan directly for a fixed asset. It is possible. There can be another general loan of say 30 lakhs, which is taken for general purpose. It might be for fixed asset also. I don't know the money where it has gone. I cannot say exactly how much money has gone where, because that loan was for general purpose. Okay. I cannot say that. So every loan is for either of the two purposes. Either it is for a specific purpose or it is for a general purpose. Now, as we have learned yesterday, while doing the discussion of interest on loan taken for the fixed asset, that you have to capitalize the interest to the asset till the time the asset is not put to use. Once the asset is put to use, you have to do what? You have to make it as a revenue expenditure. You can take the deduction under P&L. Okay. So now, here also, we are learning how we are going to capitalize. We know that till the time the asset is not put to use, we have to capitalize the borrowing cost. But in this ICDS, we are trying to learn how we will capitalize that. Are you able to understand that? So for that, you need to see whether the funds are specifically borrowed for qualifying asset or not. Qualifying asset. You might have heard this word in accounts. Yes? Please tell me, what is a qualifying asset? As per accounting standard, an asset which take a substantial period of time for it to be ready for its intended use, right? Something like this. Technically, this is the definition. As per AS, an asset which takes substantial period of time for it to be ready for its intended use. Now, what is substantial period? Generally more than 12 months. Can it be less than 12 months? Yes, it can be less than 12 months also. So, if an asset is taking substantial period of time, that asset will be called as a qualifying asset. A qualifying asset is an asset which is not ready for use, which is under construction, which is under process. Once it becomes a ready asset, it cannot be called as a qualifying asset. And therefore, if a loan is specifically borrowed for that, then without thinking anything, directly capitalize that particular interest to that asset. Do you agree? If a loan is taken without any what? Without, it means it has been taken with a very clear intention that you will be using this loan only for qualifying asset. So without any second thought, capitalize that interest without any second thought. Problem is not here. Problem will come here. If I have taken a general loan, then how much I will capitalize to my qualifying asset? It's a general loan. It has been used for multiple purpose and not only for qualifying asset. Then how will I capitalize that? Then you will capitalize by this formula. This formula is given by the government. This will be used to capitalize the interest, in which A into B divided by C. Now what is A? What is B? What is C? Nothing great. A is interest and B is the proportion in which you are going to capitalize. Which interest? Common sense. Out of these two loans, which interest will come in A? General loan interest. Anyway, specific loan interest is already capitalized, right? So you have to capitalize general loan interest in certain proportion, right? I cannot fully capitalize. I cannot fully ignore also. If I cannot fully capitalize, if I cannot fully ignore, then I have to find a proportion how much I can capitalize. And that is what this provision has to say. A into B divided by C. Now what is A? C. See what is A? It means that is general loan. Yes or no? Borrowing cost other than directly attributable to what? Specific purpose. It means you take borrowing cost other than this one. It means the general loan, right? And by what ratio I will multiply it? C into B divided by C. Now what is B? There are three B's over here. Whichever B is applicable in your case, apply that. First, take average of the qualifying asset as on the first day and the last day of the previous year. So whatever qualifying asset is there on the first day, whatever qualifying asset is there on the last day, 1st April, 31st March, divide by 2. That will become your B. Okay. And then what is C? Take average of balance sheet total. C. Take average of all the assets on 1st April and 31st March, divide by 2. It's very common sense. Listen carefully. This is balance sheet, right, beta? And there is a general loan here of 30 lakhs, 10% interest. Therefore, the interest on this will come to 3 lakhs, right? Pay attention. Out of it, there is a qualifying asset here of say 7 lakh. And the total of the balance sheet is say 50 lakhs. So, it's very common sense. The 3 lakh interest will be apportioned in this ratio only, na? Whatever loan you have taken will be there on the asset side, na? It will be there in the assets or in the stocks or in the data, or if nothing is used, then it will be there in the bank account at least. So you have to consider that interest ka proportion as whatever you have put in qualifying asset divided by your total assets. Yes or no? So what is B? Average of qualifying asset as on the first day and the last day. Okay. If qualifying asset is taking so long to get it complete that it is there on the first day also, it is there on the last day also, then take the average of that and divide it by total assets. Is it clear? Now, this may not be the situation always. Sometimes situation might be point number 2 also. In case qualifying asset does not appear in the balance sheet on first day, can it happen? Because you started constructing the asset in the month of June, so it will not appear on 1st April. Or both, it does not appear in the balance sheet on first day, or both. Both means what? Suppose you started in June and completed in December, so it is not there in April also, it is not there in March also. Then what to do? Then take half of the qualifying asset. Whatever is the cost of the qualifying asset, divide by 2. That just take half. Is it clear? So in first case, the qualifying asset was there at the beginning also, was there at the end also. Divide by 2 average. In second case, it was not there on the first day. Or it was not there on the first day also and last day also. Then take what? Take half. Third. There is one more situation which is possible. In this case, qualifying asset was not there on the first day. So third case. In case qualifying asset does not appear on the last day, it means it was there on the first day. Please tell. Then what to do? Then take the average of the cost of qualifying asset as on the first day, because it was there on the first day. So take the average on the first day and the date of put to use. Suppose it was put to use in the month of December. So take the average of April and December, divide by 2. Are you clear? Whichever case is yours, accordingly take B. B is the numerator. And the denominator will be constant all the time. That is the total assets from the balance sheet. Okay. Something is written below. You can read that. Something which is very straightforward. Clear? Not much important for CA exams at least. They have never asked this in exams. So they have put some extracts of ICDS in your syllabus. The one which has been put over here for intangible assets one which is put over here for borrowing cost, etc. There is one more on subsidy which I'll be taking later on. I'm not taking that as of now. Now, pay attention please, all of you. Suppose there is a company by the name called as what? A Limited. On 1st April 2022. The company has an opening WDV of furniture of 1 lakh. Further, company purchased some furniture of 2 lakh on 1st of July 2022. Okay. Then in that case, we all know that furniture is depreciable at 10%, right? There is nothing great to say in that. Now, after a few months, that is on 3rd of October 2022, B Limited came and took over A Limited. That is got amalgamated with A Limited. Purchased A Limited. So, A Limited became amalgamating company and B Limited became amalgamated company. Okay. Okay. So, now these assets are also transferred to B Limited. So, now in this case, the question is, how will the depreciation be computed? Okay. So, listen carefully. I have said you something in the last lecture, which was very important. I'm again repeating. I have said you in the last lecture that in income tax, you do not get depreciation in the year of sale. Do you remember that? So, by that logic, because the amalgamating company is transferring the assets to amalgamated company, right? By that logic, amalgamating company should not get the depreciation in the current year. Do you agree? They will not get, because the assets are removed from the block of amalgamating company. Therefore, amalgamating company has no right to claim depreciation on this particular asset. But the government is giving great benefits to amalgamation under the entire income tax law. Entire. There are one of the greatest benefits that you can ever see is given under the entire income tax law. I am not trying to list down the benefits. I am starting with the first one today. Government says that in case of amalgamation, depreciation will be computed not in a normal way, but in an exceptional way. And wherever there is an exception, it means what? There is in income tax law, if there is an exception to a section, then that is called as what? A proviso. There has to be a proviso for this. So the government has created an exception for this. Exception means a proviso for this. And what is the proviso? Listen carefully. Government says that in case of amalgamation, listen carefully. You have to answer me. In case of amalgamation, demerger, succession, compute depreciation as if amalgamation has not taken place. Just think that amalgamation has not taken place only. And then compute depreciation. Please help me. Please help me to compute depreciation. Please help me to compute depreciation on 1 lakh. How much depreciation will be on opening WDV? Please help me. 10,000. And how much depreciation will be there on new asset? 20,000. So listen carefully. This logic which I am saying is for 3 things. Amalgamation, demerger and succession. What is amalgamation? Everybody knows. What is demerger? Everybody knows. What is succession? Succession means a firm was there, now it is converted into a company. A sole proprietor was there, now it is converted into a company. That is known as succession. Succession means you are changing the structure of the company. You are changing the structure of the entity from one entity to another entity. That is known as what? That is known as succession under the income tax law. So what the government says, I am again repeating, in case of amalgamation, demerger, succession, compute depreciation as if no amalgamation has taken place. I have computed. Now whose authority is this? Who will take this depreciation? Now government says that once you have computed, yes, I have computed. I have computed making what assumption? That amalgamation has not taken place only. Demerger has not taken place only. Succession has not taken place only. Once you have done that, now you call back the amalgamated company. And now you bifurcate this between amalgamating company and amalgamated company. You bifurcate this also between amalgamating company and amalgamated company. Obviously in the most common ratio. Which ratio? You have to divide this between both of them in some ratio. Which ratio? What do you think? Shareholding. It will be divided in the ratio in which the assets are used by both of them. It will be divided in the ratio of number of days the assets are used by them. So please tell me, what is the ratio of this 10,000 rupees between A and B? How many days A have used? Please tell. How many days A has used? How 91? Are you mad or what? From 1st April to 2nd October, it is 91 or what? Use your brains little bit. You have computed one date, 4th October. From 4th October, if you use, then it is 179 days. From 3rd October, if somebody use, then it is 180 days. So B is using from 3rd October, right? Use some brains in life. Don't waste time in life. That is the reason paper gets left in the examination. Because you go on using calculator for silly things. Think wisely. From 4th October. 4th October is the cutoff date. I have told you 3rd and 4th October. If an asset is used till 3rd October, it was 180 days, right? So B will come to 180 now. B is using from 3rd October. Did you got this point? And A will get 185. Please answer. Please answer. What about this new asset? With this new asset is also 185 is to 180. Obviously, no 185. 180 is correct, but not 185. For B, it is 180 days because B is using from 3rd October to 31st March. But now A is not using from 1st April. A is using from July. Are you able to understand this? So now you can calculate. July 31, August 31, 62. September 30, 92. And October 2 days, 94. And therefore here the ratio will be 274 total days. Are you able to understand that? So how to compute depreciation in case of amalgamation, demerger, succession? First of all, assume that amalgamation has not happened and compute it. And then segregate between both of them. Give to amalgamating company and amalgamated company in the ratio of number of days the assets are used by them. So I'm asking you, is it an exception or not? That amalgamating company A Limited is getting depreciation in the year of transfer also? This is the great benefit given by the government for amalgamation. Amalgamation is at utmost priority of the government of India. Government wants amalgamation to happen. Government encourages amalgamation. Amalgamation has many positive impacts in the economy. That's the reason the government has taken every possible step under income tax law also to encourage amalgamation. This is one amongst them. Government is giving depreciation to the amalgamating company also in the year of sale. That is something which is not available to normal assessees. Okay. You can see this example over here. You can read till here. Page number 2.10 till here. Read? Now, the next question which will come over here is very important. Once again, pay attention on the board, please, all of you. And that next question is, please let us think on this. Now, these assets, that is this furniture, listen carefully, all of you, leave aside everything. Now, this asset is going to be part of B Limited's balance sheet, right? Now, balance sheet is for accounts purpose. Let us talk about tax. In tax, these furniture will be part of B Limited's furniture block. Yes or no? These assets will be part of B Limited's furniture block or not? So this furniture will ask you a question. These furnitures will ask you a question. At what value we will go to the block of B Limited? They will ask for a value, na? It has to be entered into the block of B Limited at some values. So at what value it will be entered to the block of B Limited? Again, that is a great benefit. You might feel this is a dual benefit. So be it. Let it be a dual benefit. But the government is intended to give you a dual benefit. The government says that the value at which the furniture will enter to the block of B Limited will be these values only. That is the opening WDV and the purchase value in the hands of A Limited. You might feel that there is a dual benefit. Logically speaking, at what value it should go in the balance sheet of B Limited? It should go at a value of 1 lakh minus whatever depreciation A has claimed, right? Minus 2 lakh minus whatever depreciation A has claimed, right? Logically speaking, it should go at that value, right? Please tell. But government goes beyond logic sometime to give benefit to the assessees and says that depreciation should be shared by both of them, and the WDV, opening WDV of A Limited will become the WDV in the hands of B Limited. The purchase cost of new asset will become the purchase cost in the hands of B Limited. See over here. Very important point for the exams. Here. You might feel it is a dual benefit. So be it. Rehne do. There are much bigger benefits given by the government of India for amalgamation. You will not realize also such great benefits are given by the government. Now let's talk about one small thing and then we'll talk about SLM depreciation for today. A very simple question I am asking you all. You try to answer that particular question to me, all of you, please. That's a very practical question to all of you. Listen to my question, please. Shall I? Shall I ask? Listen carefully, all of you, please. Suppose if I purchase a mobile phone, say for 1 lakh rupees, they are depreciated at 15%. Okay. Say I bought this phone. Okay. Now this is the only phone that I have with me. I don't have any other phone. I attend my personal call on this phone. I attend my business call on this phone. I reply to a personal message on this number. I reply to my business message on this number. So now the question is, I'm using this phone partly for personal purpose and partly for business purpose. Okay. Then will the government give me depreciation on the entire amount? Or will they disallow proportionate depreciation? This is my question to all of you. And this is a very practical and common question in office. Because there are so many common assets that we use for business and personal purpose. I have one car, which I use for my business purpose also, personal purpose also. I have one mobile phone, one laptop, which I am using for both the purpose. Then will I get the entire depreciation? Or will the government disallow the entire depreciation? Or will the government give me a proportionate depreciation? Answer. What do you feel? Please tell. Not much important for exam, but maybe important for office. Please say something. What will I do? But how much proportionate Kajal then? What will be the proportion of that? Okay, fine. No issues. Read this on page number 2.22. Read this paragraph. Ignore section 30 and 31. We don't know that as of now. 2.22. Ignore section 30 and 31. We don't know section 30 and 31. What is written over here? AO will determine and it will be restricted to a fair proportionate part. Right? Again, what is fair proportionate? Nobody, fair proportionate is subjective term, right? Everybody will defer to this particular term. Someone would say 20% is fair proportionate. Someone would say 30% is fair proportionate. I cannot say. Depreciation will be how much? 15,000. You have to take something which is fair enough. Say 30% disallow. 70% allow. Therefore, 4,500 you do not take. Only take what? 10,500. Are you clear? I do not know how this percentage has arrived. Can I say that depends upon all facts and circumstances of every case? I cannot say that. I cannot say that. Please. That is something which is not in my control. Okay. Now, coming to the discussion of now, the next one, that is what? The SLM depreciation. Now, as I have told you at the beginning of this chapter that there are four kinds of depreciation. One is normal depreciation, one is additional depreciation, and there were two more depreciation if you remember. So now we'll be talking about the third and the fourth one. Pay attention on the board, please. First of all, the homework has to be done at our end. We will do that homework and then we'll get into the section and understand the concept. Not much important for exam. I've told you earlier, only 99% of the discussion is about normal depreciation. It's not about what? SLM depreciation. But still it is there in the syllabus, so we have to see it. Pay attention on the board, please. All of you pay. See here. Please see here. The discussion of SLM depreciation is given to power generating assessees. To whom? Power generating. And that too they have an option. See, the government has given them two options. Either go for WDV or go for SLM, whichever you want to go. Check. This option is not there for other assessees. Clear? This is the first thing which I had to say. Now let's read the paragraph. The way we have read for 32.12. Right or not? We have read that paragraph so many times. 32.12 first page. We'll read this also. 35.11 provides that an assessee in the business of generation or generation and distribution of power will be allowed. Depreciation will be allowed in respect of building, machinery, plant, furniture being tangible asset, know-how, patent, etc. being intangible asset, not being goodwill, owned wholly or partly by the assessee and used for the purpose of business at prescribed rate, and from here the things will change. Till here everything was same. On here the things will change. On actual cost of each asset, not block. Here block concept is not there. On actual cost of each asset on the straight line method of the depreciation. So from here the things change. From here till here. Are you clear? Are you clear? So now, shall I ask you two questions? Sure. First question to you all. You have a book. You can go through the textbook and answer, but you have to go through the textbook only. Don't go through the color book. Go to the textbook and answer me. First question. If I'm engaged in, or forget about that. If I go for this option, okay, I want this option, means I want SLM. I have an option of WDV also, right? But I don't want WDV, I want to go for SLM. So my question to all of you, listen carefully. If I go for this option, will I get the benefit of additional depreciation? Take your time and answer. Will I get additional depreciation? And the answer is a big no. Listen carefully. Go to the section of additional depreciation, all of you, please. Fast. Have you been to that section? What is written in the last line of this section? Can you see that? That a further depreciation of 20% on actual cost shall be allowed under section 32, subsection 1, clause 2, not clause 1. Shall I go to that page? Or have you found that page? I'm talking about this page. What is written over here? That a further depreciation of 20% shall be allowed under section 32, subsection 1, clause 2, not clause 1. I'm just asking you a question. Government has made 4 sections of depreciation, right? Pay attention over here, please. Please. One is 32.11, one is 32.12. Listen to my clauses carefully. One is 32.11, second is 32.12, third is 32.12a, and fourth is 32.13. Why the government has made like this? Why they have not made 32.11, 12, 13, and 14? Why they have made 1, then 2, then 2a, then 4, then 3? Why they have made? You can see on the first page of the summary. Just wait, I am showing it. You can see here 1, 1, 1, 2, 1, 2a, and 1, 3. Why they have not made 1, 1, 1, 2, 1, 3, 1, 4? They could have done easily, right? They are trying to tell you that 1, 2a is an extension of 1, 2. It's not an extension of 1, 1. I don't know whether you got this point or not here. It's a subclause of this particular clause. It's an extended arm of the main section. And even in the additional depreciation section, it is very clearly written. What is written very clearly? That additional depreciation is allowed as 20%. Further depreciation under this section. Yes, it is written or not, beta? Please answer, yeah. And so that I should not stretch this discussion unnecessarily. Therefore, moral of the story is what? Keep both the pages like this in your hand. The page of 32.11 and additional depreciation. Keep it in front of you. You have to switch here and there. I may not switch again and again. I know that. So what we have concluded out of this? Please tell me the conclusion, ultimate conclusion, all of you. Additional depreciation is not allowed if you claim which method? SLM. If you want additional depreciation, go for WDV. You will get it. Okay. Second, shall I ask? If I am engaged in the business of generating power, okay, will I get additional depreciation? Will I get the section of additional depreciation? You have a book, you can go there and check, yeah. Don't see my on my face. It is not written over there. For SLM section, you can come on my face. You can see over here. But additional depreciation you see in your respective book. If there is no great question I am asking now. If I am engaged in generating of power business, will I get additional depreciation? Do I have an option of taking SLM depreciation also? Shall I go ahead? If I'm only engaged in transmission of power, what? I only transmit power. I don't generate, I don't distribute. I believe in transmitting only to house. It is kind of delivery of power to your house. Will I get additional depreciation? Do I have an option to come to 3211? Listen carefully. That's what I want to compare you all. That don't, just because as a student what you will read means you will very casual. There it is written power, here also it is written power. It is not only power. Check properly. Power is the most important word, I agree. But before power there is something which is written. Transmission is mentioned over there but not mentioned over here. Can you check that? So the scope of additional depreciation is wider as compared to the scope of this section. Do you agree? Now here you are going to get depreciation on what method? Block or individual asset? Individual asset. Now how the depreciation will be available? Listen carefully. I am putting one example on the board. Pay attention please all of you. Suppose if I purchase a furniture of say 100 lakhs, the rate of depreciation is 10%. Okay. So how much depreciation I will get? I will get 10 lakh depreciation every year. Okay. So I took depreciation for 3 years. So 3 years depreciation would come to directly 30 lakhs, right? This is the beauty of SLM depreciation, right? Yes or no? Directly 30 lakhs. Every year I am going to get exact 10 lakhs, 10 lakhs and 10 lakhs. This is the beauty of this is the beauty of SLM depreciation. Your amount of depreciation does not change on a year-to-year basis. So this is what I will get for 3 years. 10 lakh for first year, 10 lakh for second year, 10 lakh for third year. Sir, will this depreciation also become half? If it is used for 180 days or less than 180 days, sorry, then the answer is yes. Okay. This will also become half if it is used for less than 180 days. Everything is same except the way of computation. The way of computation differs from WDV to SLM. That's it. Now, the WDV after 3 years is 70 lakhs. In the fourth year also, you will get 10 lakhs. So, in the fourth year, the WDV will be 60 lakhs. In the fifth year, the WDV will be 50 lakhs. In the sixth year, the WDV will be 40 lakhs. And after 10 years, the asset will become zero. This is the beauty of what? SLM depreciation. Okay. Now, listen carefully. Here the real tax implication starts. All of you please listen. Now suppose if I sell this asset, what I do? I sell this asset. And say for example, I sell this asset for 50 rupees, 50 lakhs. Or let me take more examples. Or if I sell this asset for say 90 rupees, okay. Or more example I would like to take. Or if I sell this asset for say 130 rupees, okay. Now, what will be the tax implication? Shall we start? If I sell this SLM asset, what will be the tax implication? So, listen carefully. These are some of the new things you might have not heard earlier. I don't know whether you have done this in CA Inter or not. I'm not sure about it. So, listen carefully. You have to listen everything anyways carefully only. Whatever you have done also. You would have realized what you have done in CA Inter is of no use in CA Fund by so far. Okay? You would have done depreciation in 10 minutes in CA Inter. Right or not? And here it is going for 10 hours. That's the difference of CA Inter and CA Final when it comes to income tax. So, suppose the WDV of the asset is 70 lakhs as you can see, but I sold that for 50 lakhs or 90 lakhs or 130 lakhs. Then what will happen? These are three different situations. So listen carefully my provision. If an asset is sold for less than the WDV, means case 1. In case 1, I am selling for less than WDV. If an asset is sold for less than WDV, then the differential amount, that is how much? 20 lakhs will be allowed as a deduction, and it will be called as a terminal depreciation under section 32 subsection 1 clause 3. Listen carefully. I am explaining the meaning of the terminology also. Okay, don't worry. So if an asset is sold for less than WDV, it is sold for even lesser than WDV. WDV is 70, you are selling even lesser than 70. Then the differential amount is your kind of loss. Yes or no? That is allowed as a terminal depreciation. What do you mean by the term terminal? Terminal means something which is ending. So this is the depreciation at the end of the life of the asset. The asset is dead now. Asset's life is over. So we are giving depreciation at the end of the life of the asset. And that is the reason it is called as terminal depreciation, which is allowed in the year of sale, because the asset is terminal now, has gone to the terminal, has gone to the end. Now there is something called as principle of equality. If the difference between the two is the loss, then it is allowed as a deduction. So if the sale value is more than WDV, it is more than WDV but less than cost. Listen carefully. It is more than WDV but less than cost. It means it is more than 70 but less than 100. Yes or no? More than 70 and less than 100 is that only, na? Then in that case, the differential amount that I am talking about, case 2, are you able to realize that? Then the differential amount of 20 lakhs, how much? Is known as balancing charge under section 41(1), which is deemed to be income. This is your deemed income. It is called as deemed income. Deemed income, technical name is balancing charge. So rule is very simple. If there is a loss, if you are selling lesser than WDV, then terminal depreciation. If you are selling more than WDV, then it is a profit, kind of profit, it is income. Are you clear? Now what is balancing charge? Balancing charge means, listen carefully, make this P&L in your mind. Can I say so far you have claimed 30 lakh rupees depreciation? Right or not? And you are receiving 90 lakhs out of the sale of asset? So can I say you are recovering 20 lakh of depreciation out of this? Something you have claimed as deduction, you are trying to recover that also from sale. So the benefit which you have taken earlier, balance that. Add 20 lakh to income. Are you able to understand that? And 100 rupees asset is depreciated to 70 rupees. You have taken a benefit of 30. Now you are recovering 90 out of that. So you are recovering 20 depreciation also, na? So whatever depreciation you have claimed as deduction, you are trying to recover that through sale. So balance that much amount. That is the reason it is called as balancing charge. Are you able to understand? So balancing charge is only to the extent of depreciation claimed earlier. If the sale consideration would have been 80, how much? Then the balancing charge would have been only 10. So in third case, listen carefully and answer me. Again I am saying the balancing charge will be only to the extent of depreciation claimed earlier, not more than that. And this will be chargeable under 41(1). 41(1) comes under the range of PGBP sections. 41(1) comes within the range of PGBP sections or not? So it will be 41(1) PGBP income. Don't write anything, everything is there in the book, in the form of same chart only. Now the third one. If you sell the asset for even more than the cost, then first balancing charge. How much will be the balancing charge? Apply your common sense and tell me. How much will be the balancing charge? Apply your common sense and tell me. Only 30. Don't take 60. And now, is the assessee trying to sell an asset? This will be PGBP. Right? To the extent the depreciation was claimed earlier, that will be balancing charge. And now what will happen? Listen carefully. Now, assessee will also be liable for capital gains. What is capital gains? Sale consideration minus cost of acquisition. How much is the sale consideration? 130 lakhs. What is the cost of the asset which you have purchased for? 100 lakhs. Therefore, the differential amount of 30 lakhs will be considered under capital gains. Are you clear? Is everyone clear? So now I would request you all to read very few things in next 2 minutes. I have not completed the discussion. Wait for some time. In some time, I will complete the discussion. You can come to page number 2.11 and you can read from here only till here. Only till here. Don't read below that. Okay. I'll come. Now listen carefully what is assessee saying over here. In this case, assessee has a valid point over here. Listen carefully. And see what I am highlighting, all of you. Ajal beta, Aja. That in third case, if you are computing capital gain, sale consideration 130 lakhs, cost of acquisition 100 lakhs, 30 lakhs is capital gain. And you will tell me to pay tax, right? So the assessee is asking that in the first and the second case, why capital gains is not computed? Even in the first and the second case, the asset is sold now. So the capital gains has to be computed in the first and the second case also. So if you compute the capital gains in the first case, sale consideration. How much is the sale consideration? 50 lakhs. Cost of acquisition. How much is the cost of acquisition? 100 lakhs, right? There will be a loss of 50 lakh rupees, capital loss, right? Similarly, in second case, if I start to compute capital gain, sale consideration is 90 lakhs. What is the cost of acquisition? Cost of acquisition will remain same at 100 lakhs. So here also there is a loss of how much? 10 lakh rupees. Can you see this? Yes or no? So now the assessee is saying that when there is a gain, you are saying pay tax. So when there is a loss, allow the loss also to us. Correct or not? Now, if the government start to allow this loss now, then there will be dual benefit given by the government to the assessee. How? Listen carefully. Can I say, if the government, again I am saying, if the government start to give you this loss, then there will be a dual benefit given by, then there will be a dual benefit which the government has to give you. Now, how the dual benefit will be given to you? Listen carefully all of you. Pay attention please, pay absolute attention. You only think, please think at your end, all of you. You have already taken the difference between 50 and 70, 20 lakh as deduction. Yes or no? Now you are again asking the difference between 50 and 100 as deduction over here. Yes or no? So the government said that no. It will lead to dual benefit. Now 50 and 70 is already taken as deduction under PGBP. Now you again want a deduction of 50 minus 100 under capital gains. Will it not lead to dual benefit? Please tell me. Therefore, the government says that in these cases, the capital gains will be computed in a special way. In such a special way, listen carefully, in such a special way, capital gains will be computed that if there is a gain, then gain will come. But if there is a loss, then gain will become to zero. That is a special formula given by the government. The special formula is over here. How to compute capital gains when a power generating asset unit sell an asset? Listen carefully. Sale consideration minus cost of acquisition, but you have to adjust the cost of acquisition and now it will be called as adjusted WDV. Now how the adjusted WDV will be computed? Listen carefully. You have to compute cost in a special way as mentioned over here. What is the special way? Don't write 100 rupees. Don't write 100 rupees over here. Compute in a special way given by this particular section 50A. How it is given? Listen carefully. WDV plus agar koi, if there is any balancing charge, less if there is any terminal depreciation, then that will become your adjusted WDV and that take that over here as your cost. Now let me put the sale consideration. In first case my sale consideration was how much beta? 50. In second, in third, 130, right? In my textbook. Here it is 90. Shall we take these numbers then? Whatever number you will say. Textbook number. So that you will revise as per that only. 50, 80 and third one is 120, right? Now do not take 100 over here. Take adjusted WDV. Now what is adjusted WDV? For all three cases. Case 1. WDV is 70. Please tell yaar. In case 1 there is balancing charge or terminal depreciation. So there is no balancing charge. There is a terminal depreciation of 20 rupees, right? This will become to 50. And this will become your cost in case 1 and see now it will become to 0. It will not come loss. They have made such a formula whereby if there is a loss, it will become 0. If there is a gain, it will remain gain. The gain will not become 0. You will see that. In second case, what is the sale consideration? WDV is 70. In second case, there is a terminal depreciation of 10 rupees, right? Sorry, balancing charge of 10 rupees. And terminal depreciation is nil. This is 80. Again 80 minus 80 will come to 0. Can you see this? In third case it is 70 plus 30 rupees balancing charge. Terminal depreciation nil. This will come to 100, right? And this will be reduced from your 100. This will become 20. Gain will come to gain, but loss will become 0. Are you able to understand this magic? It's very simple. It's very simple. Now, I'm telling you the mathematical game. Here you are taking terminal depreciation. Is it benefit for you? Yes. Is it benefit or not? Under income tax law. Are you are going to get deduction of this, na Kajal? So is it a benefit for you or not under income tax law? In business sense, it is a loss. I agree. But in income tax sense, I am asking, is it a benefit or not? So listen carefully. How to think? Don't remember all these things. Who will remember all these formulas and all? It is very simple. If this is a benefit in PGBP, then reduce that benefit in capital gains and reduce the cost. And if there is a disadvantage over here in PGBP, this is a disadvantage in PGBP, right? Because you have to pay tax on this. So increase the cost over here so that the capital gains is less. Whatever benefit you have taken over there, you will adjust in what? In your cost. And whatever disadvantages you have borne over there, you will adjust in the cost. Are you clear? Now again, please tell me, isn't this an exception to the norm that depreciation is not allowed in the year of sale? Isn't this an exception? That you are getting a depreciation in the year of sale also? So there are, I am just summing up this discussion. There are only 2 exceptions under the income tax law. You can see this over here. There are only 2 exceptions under the entire income tax law where depreciation is allowed on what basis? It is allowed in the year of sale also. Check it. One is terminal depreciation. One I have taught you today only, that is in amalgamation. Right? Is it clear? Now, honestly speaking, this entire discussion of slum sale not much important for exam. They have not asked much. This is a less important part for your exam. But otherwise, most of the parts in this chapter are important. Now, one last thing is there in this chapter. Let's do that. And that is important. See on the board, please, all of you. There is one section 43A. What does it say? Listen carefully. It says that if you import any machinery, import a fixed asset, and there is a foreign currency loan on it, or there is a foreign credit. Listen carefully, it's an important section. It comes in exams a lot of time. So pay absolute attention on this. I am importing an asset. I am not purchasing asset from Mumbai or Delhi or Punjab or Uttar Pradesh. I am importing. Importing is necessary for this section. Second thing, between there is an and. It means both the conditions have to be fulfilled. There is no or. So and is there. You have to fulfill both. The second condition which you have to fulfill is there has to be a foreign currency loan on it. Foreign currency loan. It is not purchased directly by paying the entire money, nor it is purchased in INR. It is purchased in loan in foreign currency, or you have taken the credit from the creditors, where you will pay the money in installments. Okay? But in foreign currency. So now, whatever gain or loss will come on the date of, listen carefully, payment. Date of what? Payment, not on 31st March balance sheet date. On the date of actual payment will be adjusted in the WDV of the asset. But when? On the date of payment. I am explaining you with example, don't worry. Okay. So suppose I bought this phone on credit from outside India. Okay. So don't do anything today. Whenever you will start to make the payment of this, at that time, whatever is the gain or loss, you have to adjust in the WDV of the asset. If there is a loss on currency exchange, then loss is a cost to you, right? Extra loss is an extra cost. You have to add it to the cost of asset and claim depreciation. If it is a gain, reduce from the cost of asset. But on the date of payment, not on balance sheet date, the way you do in accounts, right? Very important section, please. Very, very, very important section. Lot of adjustments are asked on this particular question in the exam. I'm putting one example for you all. You can take a photograph of that example later on. I'm writing your example on. I need your help over here with respect to calculations. Please help me after some time. Suppose this is previous year 22-23 and I purchased a furniture of $1 lakh. Today the rate is $1 is equal to 70 rupees. Okay. So what will I do? Nothing. Opening WDV, say nil. Add purchases. Purchases how much? I have to write 70 lakhs, right? Right. And less nothing. This is nil. This is 70 lakhs. Now less depreciation. Say 7 lakh depreciation. This will come to 63 lakhs. WDV on 31st March 2023. Okay. Now previous year 23-24 is coming now. Okay. Shall I start? Opening WDV is 63 lakhs. Add nothing. Nil. But on 15th of June 2023, I paid $20,000 when $1 at the rate of $1 is equal to 75 rupees. So is there an extra cost for me? Is there a loss or is there a profit? Are, is this a loss for me or profit? Loss. How much loss is there? Loss on payment. How much loss on payment? 1 lakh? 20,000 into 5, right? So this will come to 64 lakhs, right? And now you can claim depreciation at the rate of 10%. Less 6 lakhs 40,000. Okay. So WDV on just calculate 31st March 2024 will be 57 lakh 60,000. Correct? Correct. So in first year I am not making any adjustment. Why I am not making any adjustment in the first year, beta? Because there is no payment. You have to make adjustment in the year of payment, right? Be careful about it. In the third year, 24-25, opening WDV is 57 lakh 60,000. And say 15th of October 2024, you paid $10,000, $20,000 more. When $1 is equal to say 65 rupees. So now what will happen? There will be gain. Gain on payment. How much? 1 lakh. Now you have to reduce this 1 lakh from the WDV now. Because when loss was there, you have added. So when gain is there, you have to reduce, right? So this will become 56 lakhs 60,000. And now you will claim 10% depreciation. How much will come? 5.66 lakhs. Whatever answer will come, that will become your WDV. Is everyone clear? This is how the things will go on and on till what? Till the loan is completed. Please take a photograph of this. Very important provision. Clear? Okay. Now, as you can see, this section is applicable in a very specific case. Okay. What is that specific case? Listen carefully, beta. All of you pay attention over here. All of you, please. Pay attention here, please. Bhavisha किधर गई बेटा? हाँ, pay attention, please, all of you. This is applicable in a very specific case. Very specific means very specific. In a universe of foreign exchange, a very small section is covered in this section. That is, your assets should be imported and there has to be a foreign currency loan. इसके अलावा, apart from this, nothing else is covered in this section. So there are a lot of doubts which will come to my mind. First, what if I purchase some goods from outside India and if I make the payment in foreign currency? In that case, if there is a gain or loss, what will happen with that? What if I purchase from goods? What if I sell goods outside India? That is, I export outside India and then I receive the money later on. Then what will be the gain or loss on that exchange? And it may happen, na, foreign exchange loss may happen on different transactions, na. This is not the only transaction in the world on which forex transaction is done. I'll tell you the lot of examples. Another example. What if I purchase asset from India? I'm purchasing assets from India, but there is a loan from foreign bank. It may happen, na, that this section is not applicable. Why? Because in this section the asset should be imported. Then what will happen in that case? Are you clear? Next. What will happen in case where there is a foreign branch? In my case, there is a foreign branch outside India and I'm translating that branch and I'm merging that branch with my HO's accounts and there is a currency gain or loss on conversion. You might have done it in branch accounts. In your account, see enter. That if there is a foreign branch, you have to convert the data of that foreign branch into Indian rupees. And when you do that, how will the amounts will be changed then? What will be happening with that? What if there is some derivative, some forward contract? In that also there is a foreign exchange loss or gain which can happen. What will I do with that? Nothing is mentioned in this section. It only talks about one aspect. That is, if you purchase a foreign asset from outside India and there is a foreign loan, then this section is applicable. What about other losses? For other losses, the government has made very recently, 2-3 years back, they have brought new section 43AA. Okay. Now, this 43AA is something similar to what you do in accounts, right? In accounts, what you do? First, you book the transaction as on the date of transaction. Then you revalue on balance sheet date. Yes or no? And then you make an actual payment, an actual receipt. At that time, you again recognize the gain or loss. So, this is the same thing you have to do in 43AA. Now, what does 43AA says? Right hand side. We will do a comparison of both of them. What is 43A? Page number 2.12. 43A talks about outside India if you are purchasing plus foreign currency loan. 43AA, any gain or loss other than 43A. Other than 43A, if there is any gain or loss, you shall be treating that as income or loss as per the ICDS. So 43A is normal. It is saying any gain or loss other than 43A will come in 43AA either as income if there is a profit, either as loss if there is a loss. Okay. In 43A, what we do? We adjust gain or loss in the WDV of the block of asset on the date of payment, right? No adjustment on 31st March in 43A. Right or not, beta? But in 43AA, you will record the transaction and then on 31st March, you will reinstate as per the prevailing rate, just like accounts. Just like accounts, you will do it over here. Okay. And below are some of the examples of what? 43AA. Examples of gain or loss under this section. Monetary transactions can have gain or loss. Even non-monetary items are adjusted under income tax law. In accounts, non-monetary items are not adjusted if you remember. Only monetary items are adjusted in accounts. But in tax, even non-monetary items should be adjusted. Translation of financial statement of foreign operations, foreign currency, forward contracts. If there is a gain or loss on forward contract. Yes or no? There can be gain or loss in forward contract also. What kind of gain or loss can be there in forward contract? Please tell me. You have booked the forward at 75 and now the actual rate is 78. There can be a gain or loss, right? Because you have to pay at 75 only now, whatever the rate is. Yes or no? And foreign currency translation reserves. These are some of the examples. So this is the only unique piece for which the adjustment has to be made in the WDV of the block of asset. Apart from this, everything else has to be adjusted in what? Adjusted in a normal accounting way. Okay. Now, there is one more thing which I have to speak, which I'll speak along with the question which is there in the textbook. One more aspect is there, I'll speak along with the question. So, come to the textbook, all of you, please. Page number 2.30, all of you, please. This fourth one I have to speak, that I'll speak along with the question. Question 1, page number 2.30. Shall we start? First, X Limited sold goods worth rupees 1,50,000 to ABC Inc. in USA on 25th September 2022. Okay. ABC paid $50,000 on 31st December and another 50,000 on 2nd Feb, and balance 50,000 was due on 31st March. It's a very simple accounting question. First of all, which section will be applicable? 43A or 43AA? Please tell. AA obviously. A is not applicable here. Okay. Now, first of all, on which date you will record the transaction? 25th September, right? Right or not? On that date, you will record the transaction at 65 rupees. Calculate how much amount will come. $97,50,000. Okay. Now, let's calculate the gain and loss in future. On 31st December, there can be gain or loss? There is a gain or loss? Please tell. On 31st December, the rate is 65.5 and you are exporting. For exporter, it is a gain or loss? Gain of 50 paise, right? So 25,000 gain over here. Then in the month of Feb also some payment is made. Payment is received. How much payment is received? 65.4. Again gain. Right, beta? Gain of 20,000 rupees. Is it clear? And balance is due on 31st March. So shall we restate on balance sheet date? Shall we reinstate on balance sheet date? How much is balance? 50,000 into the differential amount 0.7. 35,000 is receivable. This is balance. This is the gain on revaluation on 31st March. Right or not? Shall I go ahead? Question 2. Let's read. A Limited has borrowed $3 lakh from CINC USA on 1st Feb for the purpose of business. It was repaid on 30th September 2023. Okay. Exchange differences for different dates are as follows. So on 1st Feb, when you took the loan, it was 64. So multiply by 64 and amount. How much amount will come? 1 crore 92 lakh. Cartoon. Don't miss zeros in life. Zeros are very important. Especially when it is in crores. Don't miss. Now later on 31st March, what is the rate? 64.66. So this will be gain or loss? Please tell me. Please tell me of rest of you. Loss of 66 paise. Right? Into 3 lakh. 1 lakh 98 is a loss. Then later on again it became 64.89. So there will be loss gain now of how much? 33 paise? 23 paise. Yes or no? 69,000 there is a gain. Clear? So 1,98,000 will be allowed as business loss in this year, and the rest will be allowed in the next year. Okay, whatever it is. Now coming to question number 3, a good one. Listen carefully this question. NS Limited purchase of machinery. Machinery is purchasing now, fixed asset, for euro 75,000 on 1st December 2022. Payable after 4 months. The company entered into a forward contract for 4 months at 77. It means the company has to pay 77 now, irrespective of the actual price. Yes, exchange as per euro on 1st December was 74. How the profit or loss on forward contract recognized in NS Limited's return of income. Now, please see carefully and see in the question whatever is written in this first 3.5 lines. Okay, read it carefully. Don't read the answer, please. And my question to you all is it written anywhere from where the machinery is purchased? From where? From which country? Is it purchased from India or from outside India? Nothing is mentioned. Outside. How can you say outside? Where it is written? In the question. So you have to make both the assumptions. First, if it is purchased from India, then what will happen? If it is purchased from outside India, then what will happen? Did you understand? Now pay attention on here. Leave aside everything. If it is purchased from India, then what will happen? Please tell me. Which section will be applicable? Double A will be applicable, and gain or loss. Gain or loss will be debited and credited to P&L account. And if it is purchases from outside India, then what has to be done? Adjust gain or loss on the date of payment in the WDV of the asset, right? You can check over here. 77 is the forward rate and inception rate, that is today the rate is 74. Therefore, there is a gain or premium or whatever it is, 3 rupees. Okay, the difference is 3 rupees. You have to pay how much? 77. But today the rate is 74, so there is a loss of 3 rupees to you. Arey bhai, answer kar. So 3 rupees into 75 will come to 2,25,000. So if it is purchased from India, then it is a loss and it will be debited to P&L, recognized as expense. But if it is purchased from outside India, then adjust in the WDV of the asset. Is it clear? Then adjust in the WDV of the asset. Is it clear to all of you? Now, one last point I am explaining directly from the textbook. That is from this question. I have not explained about this in the previous questions. Okay? Or not in the textbook. So, I am reading this particular question and I am explaining what is written in this concept from here only. Mr. X buys a forward contract of euro 1 lakh on 1st Feb 2023 for 3 months at rupees 73.32 per euro. At what rate he has bought the contract? 73.32 per euro. The exchange rate was 73 per euro on 1st Feb. On 31st March, exchange rate was 75 per euro. On 15th April, he decides to sell the contract at 75.20 per euro. Show how the profits are recognized. Please read the question carefully. There are multiple events which are happening. First, he buys a contract of 1 lakh euro. That is a forward contract. He says that I will buy this euro at 73.32. On that date, the rate was 73. Right or not? Later on 31st March, the rate becomes 75. And in April, he decides to sell the contract at 75.20 per euro to someone. He doesn't want a forward contract. His contract was supposed to be expired on 1st May. Correct? Right or not? After 3 months. But on 15th April, he sold the contract to somebody. He doesn't want the contract to be executed. So he sold at 75.20. Okay. Now let's see the answer. As per ICDS 6, premium, discount or exchange difference on contract that are intended for underlying trading or speculation purpose or that are entered into To hedge the foreign currency risk of a firm commitment or a highly probable forecast transaction shall be recognized at the time of final settlement. Now, what do I mean by this? Next line on the next page. In the instant case, since the contract is an underlying speculation contract, which contract it is? It's a speculation. What do I mean by speculation? He's trying to speculate the things. Speculation means like you do in stock market. He's trying to see the things. When it is best to sell, sell it. He's not doing this contract for business purpose. He's doing this contract for speculation purpose. One forward contract we do for business because I don't want to pay more money in future, right? That is the reason I decide a particular rate. I will pay this much, right? Then it is my destiny whether the rate goes up or whether the rate goes down. It might be a loss, notional loss or notional gain for me in future. But at least I'm secure that I don't have to pay much as compared to what industry is saying. Right or not? That is the obvious logic of what? Forward contracts. But he is not doing that. He is doing a speculation of that contract. He is buying and selling contracts. Hence the premium on contract will be ignored. Only the profit or loss at the time of the sale of contract will be recognized. So in such cases, premium of contract has to be ignored. Only the profit and loss at the time of contract has to be recognized. And what is the profit and loss? He has bought the contract at 73.32. Right or not? And he has sold the contract at 75.20. Right? So whatever is the difference that he has to pay as a tax. It's like a normal speculation profit. It's like a normal profit that you bought something for 73 rupees and you sold that for 75 rupees. Okay. Again, it will be coming in 43AA only. It is not a part of 43A. 43A is very specific to one single thing. And there is an ICDS over here which says the same thing. That on initial recognition, you have to record a transaction. Then on the last day of the previous year, you have to convert. Then on the date of settlement, you have to again convert. It is just like accounts. Just like accounts. Nothing different. ICDS 6. Okay. So here, if you see the chapter of depreciation is completed. Okay. So if you see there is nothing great in this. If you see that there are a lot of pages in that, there is a lot of content. But if you read it properly, there is nothing great in this. We have revised yesterday in 15-20 minutes. Most of the things. Today we have not done anything great except one or two provisions. That too, which is not important. This one is important. But the previous one was not much important. That is SLM depreciation for exams. Okay. Now if you come to the first chapter, beta, you may not come to that chapter. You can see from the board, all of you, to this page, which is page number 1.4. We started the discussion of deductions with this chart. Okay. And what we have completed after so much of efforts, this one section. Right? So now our target is to complete the rest of them. Obviously, this one section is as good as 10-15 sections. Don't worry. You would realize that this is not one section. You have done section 32, 4 subsections. Right? You have done 43.6. You have done 43.1, its explanations. Right? There are so many things you have done. It is not that you have done only one section. One section has an implication at multiple places. That is the reason I am saying it is one section. There is no other sense in saying. Now, we will talk about section 30, 31, 36, 1. These are small sections. One by one, we will talk about them. Okay, pay attention on the board, please. So, this is there in the next topic. That is in topic number 3. Other specific deductions. You can see over here. Chapter 3, first page. Now, pay attention on the board, please. Section 30. So, talks about what? Pay attention, please. Talks about rent, rates and taxes. Are you listening, beta? Repairs, insurance of, listen carefully, building. Listen carefully. All of you, please pay absolute attention. Okay. The highlighting point over here is building. Now, there can be two people over here. One is tenant, one is owner. Owner will get 3 deductions: rates and taxes, repairs, insurance. and tenant will get all 4 deductions. Okay. Now, if you are owner, then you will get 3 deduction out of these 4. 1, 2, 3, 4. But if you are tenant, you can get all 4 of them. Obvious it is. Owner cannot get deduction of rent now. Suppose I am doing my business in a building which I own. I am doing business in a building which I myself own. I cannot give rent to myself now. Yes, I can repair to my building. I can pay insurance for my building. I can pay taxes for my building, right? Yes, if you have taken that building on rent, then you can pay rent also. You can do repairs also. You can pay insurance also. You can pay premium. So, is everyone clear with this? Now, these taxes which are there over there, na, rates of taxes. What kind of taxes it is? It can be a kind of municipal tax, etc. Okay. Now, these taxes will be allowed not on accrual basis but on actual payment basis as per section 43B. As per section what? 43B. It is not allowed on accrual basis. Taxes are allowed under income tax law. Some taxes are allowed under income tax law but not on accrual but on actual payment. Are you clear? Some taxes are allowed under income tax law, but not on actual pay, not on accrual basis, but on actual payment. Okay. Now listen carefully. Repairs. Sir, will repair be allowed? Yes. Insurance will be allowed. Repair will be allowed. Sir, repair will be allowed. What kind of repairs will be allowed? Revenue repairs. Revenue repairs. The repair has to be revenue in nature, not capital. Capital repairs are not allowed in section 30. It is not allowed here. So if I do a capital repair, it is not allowed in this section. Let me be very clear with you all. Sir, what is revenue repair? What is capital repair? If you do a small repair to your building, that is a revenue repair. Suppose there is some plaster which has fallen, so you are doing a plaster. There is some problem in the door, so you are repairing the door. Then you are painting, that is also repair and renovation, revenue repair. Sir, what is capital repair? You are putting another floor on the building, that is a capital repair. You are extending the building, that is a capital repair. Then whether capital repair will be allowed as deduction? Not under this section, I said. Whether it will be allowed in some other section, the answer is yes. Where? If you are a owner of that building, okay, and you have a 3-floor building, 1, 2, 3, and you are making a capital repair of 4th floor, okay, then 4th floor will be added to the cost of asset and you can claim what? Bolo beta. You can claim what? Depreciation on it. Who is stopping you to do that? You can do that. Is it clear? You can claim depreciation on it. There is nothing wrong in that. There is no harm in that. Clear or not? Now coming to a very unique situation. Very unique. There is a tenant and there is a landlord. Obviously, building is belonging to whom? And tenant is only using it. Now, listen carefully. A very unique case. If the tenant says the building that I do a capital repair on your building, that the building is yours, the 3 floors are yours, but please allow me to make the 4th floor. I will do the expense. Can it happen? It may happen in very extreme situation where the tenant requires that for a very long term. If he requires that for 3-4 months or 1 or 2 years, he will not incur such a big expenditure on somebody else's property. It's not financially viable, right? So if he needs the property for a very large period of time, then in that case, he may think about doing this. So will he get deduction? How? The building is not owned by him. Where will he add? In the block. Here the building is owned by assessee. So he is adding to the block of building. Are you able to understand the problem over here, beta? When you are owning the building, then you can add the extension of the building to the cost of the building in the block of asset. Yes or no? But in this case, what will you do? So the government has made an amendment long back, which says what? The chapter of depreciation is not going to leave you so easily. Okay. Come back to depreciation. And there is one concept of deemed building over here. Page number 2.5. All of you, please. What does it say? Let us read. Where the business or profession of the assessee is carried on. Carried on where? Read loudly, all of you with me. Carried on where? In a building. Further, not owned by him. I am doing a business where it is not owned by me, but in respect of which I hold what? A lease or any other right of occupancy. Okay? I have a leasehold right on that building. I have taken that on lease. And any capital expenditure is incurred by the assessee for the purpose of business or profession on the construction of any structure or by way of renovation or extension or improvement of building, then such capital expenditure shall be treated as what? As building owned by the assessee. So deemed building माना जाएगा इसे. It will be considered as a deemed building. Is it clear to all of you? So listen carefully. I am again putting something over here. Pay attention on the board, please, all of you. The tenant is here. The tenant is so desperate that he is ready to do a what? Capital expenditure of 50 lakhs on the building owned by the owner so that he can do his business properly. Okay. So this will be considered as what? Deemed building. And the tenant will claim depreciation. Please tell me. And the tenant will claim depreciation or not, beta? Now what will happen after few years? After few years, when the tenant will go, will he take his floor back with him? He will give that to the landlord, right? Should landlord be courteous enough to pay some amount to the tenant? He should be courteous enough to pay some amount to the tenant, right? So after 3-4 years, whenever the tenant will leave and go and landlord will pay the tenant, okay, at that time it will be said that, listen carefully, that tenant is transferring the block of asset to landlord. Are you able to understand? And tenant will be liable for capital gains because he is transferring his deemed building to the landlord and in return landlord is giving him money. Are you able to understand that? So after 2 years, suppose the depreciable value of this asset is 40 lakhs, okay, WTV, and the tenant give you 60 lakhs, then 20 lakhs will be STCG because in block the capital gains is always STCG. Are you clear? If you are saying that I am not the owner is the tenant, but still you are considering that expense to be your deemed building, you are claiming depreciation. So when you are giving that particular building to the other person forever and you are taking money, you have to pay capital gain tax also. So what are the benefits for assessee? Assessee will get depreciation on that deemed building. What are the disadvantage for assessee? Whenever the assessee will return that deemed building to the tenant landlord and he will receive the money, at that time tax implication under the head capital gains will apply. Is it clear to all of you? You can see the example below, all of you, please, fast. This illustration. So first you incurred a capital expenditure of 4 lakh. Okay, so you will claim depreciation on 4 lakh. First year 5%. Why 5%? Because less than 180 days. Okay. In second year you will claim full depreciation of 10%. Okay. Now after few years, that is after 2 years, you are transferring to landlord at 240. If you are transferring at 240, there will be a loss. If you are transferring at 342, sorry, if you are transferring at 5 lakh, there will be a profit. Short-term capital gain, short-term capital loss. Is everyone clear with this? So this is a small concept. Yes, beta. No, 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 no. Owner is covered not under PGBP, na beta. Owner is covered under house property. Why will he depreciate? Owner's income will be classified under not PGBP, na. It will be under HP. Owner will get deduction of that 30% standard deduction, etc., for the rental amount. Okay. Now pay attention, please. I would like to speak few things about repairs now. Repairs. There is some sentence written in the law for repairs. If you come to textbook, you can see from the board, beta, you may not open the textbook, it's okay. When it is completely required, you can open. You can read this repair point, especially the first point and the second point. Let's read it together. Apart from rent, this section also allows deduction in respect of expenses incurred on account of repairs to the building. In case where the assessee is the owner of the building. If I am the owner of the building, I can repair my building definitely, right? And I can claim that as a deduction. Okay? Okay. Second, where the assessee is a tenant, not an owner. I am a tenant. Then also I can repair, right? But listen the words carefully of the law. This is written in the Income Tax Act. The assessee is a tenant who has undertaken to bear the cost of repairs. Then only we will allow. What do I mean by this? It means it has to be written in the agreement that if there is something problem, and I will repair it. The tenant has to write down that in the agreement. That do you know that in a lease agreement there is a repair clause? There is a repair clause. In case of damage to the property, who will repair? So the tenant has to undertake to bear the repairs. Otherwise, he will not get the deduction. This clause has to be there in the deed. That is license, leave and license agreement, lease agreements. Okay. So there was one issue now. Pay attention on the board, please. The classes where I used to teach earlier, face to face, that was rented class, not owned class. The owner was somebody else. Now what happened in one of the days in one of its Borivali branch in Mumbai? I was taking the lecture. I was an employee over there. I was working as an independent person. That was not my class. There is an agreement between owner and the tenant, and the classes that classes will not repair. Okay? Classes is not undertaking to repair the building in any circumstance. Listen carefully. It means it is not the obligation of the classes to repair in case there is some damage to the property, because the property was very old. So the classes did not took the responsibility of repairing, because the classes felt that because the building is so old, every day some or the other repair might come. Yes or no? Why will we bear all the cost? The classes said that right in the agreement that I will not bear the repairs. Landlord also return it. Now, literally one fine day, what happened? I was taking the lecture, and there were ACs obviously in the class, and there was also fans, and the fan was running, it was on, and it suddenly fell in front of me on head of one student. The fan which was on, it was not off, a running fan. Luckily, by God's grace, nothing happened to that student. A little damage was happened to his shoulder, nothing more than that. But now the real question starts. The question is, in that case, will the classes repair or not that particular thing? Or will the classes say, I will not repair, I have undertaken, I will not repair, let other fans also fall on student? Will the classes repair or not? I have a question to you. So we have to repair it. We were under an obligation to repair it, and we repaired it. So will I get the deduction under section 30 of this repair? Please answer. The answer is no. But the government says that because this repair is for business or profession, it is necessary for my business. You can claim under section 37(1), which is which deduction? Please tell me. General deduction. Are you clear? Subject to the conditions mentioned over there. You have to fulfill the condition mentioned. The expenditure should not be personal. The expenditure should not be capital. All those things has to be there, right? Right. So you can read this now. Entire discussion from here till here I have explained you in few words. Everything is summed up in few words over here. So I will just help you all to understand the things for the first time at least. Pay attention on the board, beta, all of you. Owner, tenant. Owner will not get rent. Agreed? Tenant will get rent also. Repair has to be capital repair, right? If the owner doesn't repair, then there is no issue. Then it will be directly added to the cost of the building of the owner and then claim depreciation. If the tenant add, then it is deemed owner, right? Explanation 1 to section 32(1), which we have seen in the chapter of depreciation. Okay. And then rates and taxes will be allowed on payment basis, not on accrual basis. And the last thing which I have told you of that fan example, that falling fan. Okay. Now, similarly, let us talk about section 31, which talks about repairs and insurance of plant, machinery and furniture. Pay attention, please, all of you. I am buying so many machinery, so many furniture, so many plant in my business. They might be subject to some repairs, right? So whatever repair you do to plant, machinery, furniture, again of only revenue nature, not capital, not capital, not capital. If you do a capital repair, not allowed under this section. If you do a capital repair, not allowed. If you do a revenue repair to plant, machinery, furniture, it is allowed. If you take plant, machinery, furniture and if you insure them and if you pay premium on them, then that is allowed. Is it clear? Is it clear? Listen carefully. Read the heading properly. Repairs and insurance of plant, machinery, furniture is covered. Don't make amendment in the exams. Please. You are very much eligible to make all kind of amendments that you can make in exams. You will go in exam and make new amendments. The examiner will be surprised with you. And he will say that now the student is so intelligent that they are recommending Finance Act 2023. Please don't mention over here rent of plant, machinery, furniture. Is it mentioned that? Is it mentioned? You will be carried away from here. You will say that it is mentioned here. So here also you will mention at your own end. Please be very precise. Here the rent of plant and machinery is not considered. Furniture not considered. Point number 2, read it. Clear? Shall I go ahead? Now, I am directly jumping to 36. In between, I am skipping 3 sections, 33, 34, 35. Listen carefully. 34, first of all, is omitted from income tax law. It is not there only. 34 is not there only under the income tax law. What about 33 and 35? 33 and 35, both of them are there as a sector-wise deduction. Which deduction? Sector-wise. We'll be looking at that in the next topic, that is chapter number 4, after we complete this topic. Okay? Now, let's move on to 36 directly. Again, there are certain small deductions over here. First of all, see over here, 36 subsection 1, clause 1. This is clause 1 as per the income tax law. If you pay premium of insurance for stocks, you want to insure your stock. Do you want to insure your stocks of business against destruction of fire, against destruction of flood, or any other kind of destruction? You would like to do what? Insure your stocks. So whatever insurance premium you pay for stocks will be allowed as deduction under this section. Is it clear? Next one, 36 subsection 1 clause 1b. Sir, what is this? Listen carefully. If an employer is paying insurance premium for health of the employees, I am employer, you all are my employees, I am paying premium for you all, for your health. Are you able to understand? Then it is allowed as a deduction to the employer, but just one condition is there underlined. It has to be other than cash. Cash payment is not allowed, absolutely not allowed here. Even 1000 rupees should not be paid in cash. Otherwise, up to 10,000 it is allowed generally. Right or not? But here even 1000 rupees cash is absolutely not allowed. Clear? So listen carefully all of you. Pay attention over here. Let me talk about insurance. Section 30 insures what? Building. Section 31 insures what? Plant, machinery, furniture. All your fixed assets are insured? The answer is yes. Now coming to stock, current asset. Current asset is insured in the below box. Right? This box. Stock is your current asset now. This box insures your current asset, right? And after that, the box next to that insures human beings. So fixed asset insured, current asset insured, even human beings are insured. You pay premium for any of them, you will get deduction under the respective section. Okay? Let's talk about the next one now. If I make a payment of bonus or commission circle to employees, not to others, not to a real estate agent, to an employee, you pay commission to real estate agent also to buy properties, right? I'm not talking about that commission. I'm talking about the commission which you pay to employees. Bonus or commission which is paid to employees will be allowed as deduction. But in this, you have to keep in mind that this is allowed subject to actual payment under 43B. I'm just trying to interlink. Whenever I will teach 43B, I will speak about all these things. I'll speak about the rates and taxes which we have seen above. I'll speak about this point which we are seeing now. Are you able to understand, beta? But I'm just trying to do interlinking with the respective deduction itself. That this deduction is allowed as deduction only if you make actual payment and not on accrual basis. So bonus and commission to employees, not to real estate agent. If you make the bonus on commission payment to real estate agent, you make payment to commission to real estate agent. Definitely when you buy a property. So at that time, we can go to some other section like 37.1. But not here. At least here it will not come. Shall I go ahead? Now there is some paragraph written over here. We need to understand this paragraph. However, where sum represents profit, then it shall not be allowed. If sum represents profit, then it is not allowed. Now, what do I mean by this? This is a technical phrase. Pay attention on the board, please. Now, what mischief certain companies do? Pay attention, especially private companies. They have 4 shareholders, A, B, C, and D. Percentage of shareholding is 25%, 25%, 25% and 25%. Okay. Now, out of these 4 shareholders, these 2 are employees also. These are only shareholders. Okay. Shall I go ahead with my mischief? See the mischievous activity of the assessee. Now the company is paying dividends to the shareholders. Company can pay dividends to the shareholders. Okay. So what company is doing? Company is paying 25,000 dividend to shareholder. Dividend is nothing but distribution of profits now. It's a part of profit, right? Which is given to their shareholder. So 25,000 profit is given to shareholder 1, 25,000 to shareholder 2, and to third and fourth shareholder, they are only giving 5,000 rupees. And they should also get 25,000, right or not? But the company is doing a mischief of paying 20,000 rupees as what? To bonus to them. Company is saying you are also employee now. You take 20,000 as bonus and 5,000 as dividend. What difference will it make to the company? Please tell me. It will make a great difference. Dividends are not allowed as deduction, but bonus and commission is allowed as deduction. Yes or no? So the company is trying to take the deduction of dividend by showing it as bonus. The company is trying to color the dividend as bonus. Yes or no? So is this bonus a profit portion or not? So if the bonus represents profit portion, then that bonus will not be allowed. That is written over there. This example is there in the book. Don't worry. You can see this example over here in the textbook. Page number 3.3. Is it clear? Anyhow paid from the profits, but bonus are paid before computing the taxes, beta. It is not. Yeah. If here you are paying a bonus of not 20,000 or 50,000 rupees to them. How much? 50,000. Then we would have not disallowed entire 50,000. We would have disallowed only 30,000 out of both of them. Sorry, we would have disallowed only 20,000 out of both of them. 20k would have been disallowed for each. 30k would be allowed to both of them. Because out of 50, only 20k represents dividend. Not entire 50k is dividend. The rule is very simple. If there are 4 shareholders holding equal shares, do they not deserve equal dividend? I am asking you a simple question. Dividends are paid based on percentage of shareholding. It doesn't matter whether you are Mukesh Ambani or a small shareholder. Right or not? So you have to pay. If you would have paid 5,000 to these people also, now I would have no problem. Are you clear? So you have to pay dividend as per your share of investment in the company. In that proportion. If you are not getting the dividend in that proportion and you are getting lesser dividend and more bonus, lesser dividend than what you deserve and more bonus than what you deserve, the differential amount has to be disallowed. Will not be allowed under the income tax law. Is it clear, beta, to all of you? Please tell me, please tell me, please tell me. Now coming to a very important section. We'll do that section and then we'll take a break after this. Okay? It's one of the most important section. If this section would have not been there, more than 50% of the business would have been closed down in India. Why? Because almost every business, Adani would have been closed down today itself. Okay? Adani is highly levered, if you are aware of that. Adani's debt equity ratio is too much, too high, highest in Asia. Debt. He has used debt in such a manner. You might be knowing that in financial management. Using debt is an art. Not everybody can use that art. He has used debt in such a manner to trade on equity that he has gone to another level now. But he is highly levered company. Very dangerous for any company to be so levered. So what I'm talking about? I'm talking about the next deduction which talks about interest on borrowed capital. Can you see this? Can the business be done today without debt? Smallest of the traders also depend on debt today in today's time. Yes or no? If you want to expand, you have to take loans. You cannot expand on your own capital. Agreed or not? Therefore, if you are expanding, if you want your debt, if you want loans from banks, then the government should give you the deduction of that loan. Or else the taxpayer would die. If the interest deductions are supposed to be disallowed, they should not be disallowed. They should be allowed. So what is written over here? Pay attention on the board, please, all of you. 3613. I'm just giving you a gist of the section first of all. I've also mentioned this number earlier while teaching you the chapter of depreciation, right? 3613 gives you the deduction of interest, right or not? Say, when I was teaching, what I was teaching, that after the asset is put to use, you can take the deduction of interest under 3613. Right, beta? No matter. Even if you don't remember, it's all fine. Today is the day when we are learning this section properly. So what does this section tells you? This section says that borrow money. Borrow means what? Borrow means you have to refund some or the other day. The word borrow means it is not yours. Correct or not? There has to be an element of refund. That borrowed money must be used for Business or profession. It should be used for either of the two. Either for business or either for profession. You have to use for either of the two. Okay. And third, that borrowed money is used for business and profession. And the third one, you have to pay interest. Interest has to be paid or payable in some cases. So you have to borrow money, you have to use that money, and when you are using, you have to also pay interest, and you can get the deduction of this interest under this section. Is it clear? So this is what is written in the first line of the section also over here. Reduction of interest is allowed in respect of capital borrowed for the purpose of business and profession in computing of income under the head profits and gains from business and profession. Okay. Then there is a bhashan of 36.13, 43.1 explanation 8, which I have done earlier with you all. That till the time the asset is not put to use, capitalize. Yes or no? Once the asset is put to use, then revenue expenditure, it shall not form part of capital asset. Yes or no? All these things are bhashan. Now I am asking you some general knowledge questions. Apply your mind and answer. Shall I ask you, beta? Can assessing officer tell me that you have taken too much loan? Don't take any further loan now. If you take any further loan, I will not give you the deduction. Can assessing officer tell me that? He's saying me there is too much loan in your balance sheet. Why are you taking further loans? Can he tell me that? Does he have the right to say this? Absolutely no. Tell him to do his work of assessment, of calculation of tax. Don't tell him to teach me business. Okay. I know what to do. I know how much to do. I and bank will take care of it. Okay. How much loan I can take and how much loan bank can give me. Tell assessing officer, don't interfere in between. Second question. Shall I ask you, beta? General knowledge questions. If I take a loan at an interest rate of 35%, how much? 35% per annum. Can an assessing officer tell me you have taken interest at a very high rate? I will not allow you more than 15%. I will only allow you 15%, 20% disallow. Can he say so? He can say so? Why? Why can he say so? Please tell me. Why can he say so? So high means then what is the parameter, madam? Then what is the last? Then what is the last parameter? What is the last percentage till which he can say? Yes, it is okay. Market interest rate can differ from person to person. This is also taken from market only. This is not taken from a friend. So what? So what? Is there a law for stopping this? I have not. Let me clarify one more thing. Shall I? I have not taken this loan from my related party. I have taken this from ICICI Bank. So, disallow. After how much rate? So, why that logic doesn't apply to all other expenses then? If I make payment of more salary to an employee, then that should also be disallowed, na? Yes or no? Why you are saying yes, I will tell you that also. I can understand your mind very clearly. You have read in CA Inter somewhere that making excess payment is disallowed, right? But that is only to relatives, not to others. If you remember, you will learn in CA final also. But that is only for relatives, not for others. Are you able to understand what I am trying to say, beta? Now sit on, Bhavisha, you have thought by sitting on the chair of government. Now sit on the chair of the SSC and think. Why the hell I will pay 35% interest if I am getting at 15%? Please tell me one good reason. Give me one good reason. Why will I pay 35% in market if I am getting at 10%? Please tell. To save tax, I will pay more interest. That makes no sense. Because to pay 30 rupees, to save 30 rupees, no one will pay 100 rupees. Arey yaar, beta, are you understanding? Taxes will be saved to the extent of 30 rupees of expenditure, na? So to save 30, I will not pay like a mad 100 rupees. Chalo, this time we have to save tax. Let's pay more salary to the employee. What sense does it make? Does it make any sense? That will be a loss of 70 rupees for you only for every 100 rupees. Therefore, at what rate of interest I will take, that is my decision. Tell assessing officer not to step into the shoe of the assessee. Don't step into my shoes and decide what I have to do. What is the job of the assessing officer? You know, in this section, he has to decide whether the money which is borrowed, is it used for the purpose of business or not. That is the only job of the assessing officer. That is the money which is borrowed by the assessee. Is it used for the purpose? At what rate he has borrowed? How much he is borrowing? Why are you concerned about all those things? If you know so much business, leave your job and start business from tomorrow. Leave your job of income tax department. If you are aware of so much of business. And if you say that, I'm talking to assessing officer. If you say that 35% is too high, so I will fold hands in front of him and say, sir, please, sir, aap dila do mujhe 10% mein. Sir, you get me for 10%. I will be obliged to you forever. Yes or no? If he is getting me at 10%, why will I pay 35%? Let me know now, please. There might be a situation that my credit rating has gone much below the standard. Nobody is giving me loan. There is one bank which is giving me loan at 35%. I have to take that. Are you able to understand? Therefore, do not interfere in the rate of interest. Tell to the assessing officer very clearly. Okay. Now, the money should be used for the purpose of business. Give me some example. If you start your business tomorrow, you will borrow money, and where you will use? Please tell. Please speak. Don't sit like this. Where you will use your money so that you can say you are using for the purpose of business or profession. You are purchasing assets for the business, furniture, land, building. Okay. Yeah, just make sure that unless and until you put the asset into use, you will not get the deduction. Once you put the asset into use, you can claim the deduction. Okay. You can purchase assets out of borrowed funds and you can claim deduction provided you put to use. Next. And why would you require loan in business? To do what? You like loan on the balance sheet liability side. That's the reason. Why you need that money? Please say. Please say. Arey, please speak about the debit side of P&L, whatever you know, yaar. You want to pay your administration expense, you want to pay rentals, you want to pay salary, yes or no? What else you would require the money for, yaar? You cannot say I'm taking loan to pay the education loan of my student, education fees of my child. You cannot say that, na? I'm taking that will be personal. That will not be allowed here. Sorry for that. Now pay attention over here. I am asking you some questions. You might make a blunder, make it, but this is very important for exams. Point number 1. Just a second. Pay attention. Point number 1. I took a loan for fixed asset. Can it be called as that I'm using the loan for the purpose of business and profession? Answer, yes. Yes, it is allowed. Second, I'm taking a loan for paying salary to employees. Can it be said that I'm taking the loan for the purpose of business and profession? Yes, allowed. I'm taking loan for my child's education. Can it be said that I'm taking the loan for the purpose of business and profession? No, disallowed. I'm taking loan. Listen carefully. I would test your knowledge now. For payment of income tax. Can it be said that I am taking the loan for the purpose of business and profession? I will stop here and I will wait for your answer now. For the first three questions, I knew that you will say the correct answer only. But now please answer, Vinita. What is your opinion? Vinita, say now whatever you want to say. Nobody is going to give any marks here. Please say. It will be allowed, Vinita, as per you? Payment of income tax is a business liability, as per you? Vinita? Okay. Bhavisha? Disallow? जूली और काजल ने तो बोला ये डिसअलाउ बराबर and the answer is disallowed. No, listen carefully. Income tax is considered as a personal liability. It's not a business liability. It is not that if you do business then only income tax will come. Income tax will come to salary assessee also. Income tax will come to HP assessee also. Income tax will come to capital gains assessee also, IFOS assessee also. It is not that you are doing business so you are paying income tax. No, it is not any business activity. If you read the charging section of income tax, there is no business activity mentioned in the charging section of income tax. What does the charging section say? Total income of a person. Of a person. It's a tax on a person. In many countries, including India, it is also called as a personal tax. Which tax? That is the reason the income tax ka kharcha is also disallowed under income tax law, if you are aware of that. Is income tax allowed as deduction? You make payment of advance tax to the government. Will you take that as a deduction while computing PGBP? Please tell me. Please. Income tax is never a business liability. It's a personal liability. It is not allowed as deduction. Income tax is not allowed as deduction. TDS is not allowed as deduction. Advance tax paid is not allowed as deduction. Nor any loan taken for payment of such taxes will be allowed as deduction. Even that will not be allowed as deduction. Is it clear? Point number 5. Shall I ask you? I have taken loan for payment of GST or excise duty or import duty, customs duty. What will be the answer? Is it allowed or not? Sure. The answer is yes, it is allowed. Why? Because GST is a business liability. GST comes if you do either of the business or profession, otherwise GST is not imposed. GST, do you get the deduction of GST also in PGBP? Assessee has paid GST. Will he get deduction of GST under PGBP? The answer is yes. It is allowed in 37.1. I'll be speaking about that later in 37.1. It is allowed as deduction. GST is allowed as deduction under income tax law. And if you take a loan for payment of GST, then that loan interest is also allowed as deduction under income tax law. Are you able to understand this? One last thing I'm taking up as of now. After the break, I'll continue with the section. I will not complete as of now. One last thing. There was one assessee by the name called as SA Builders Limited, a landmark judgment, a very important judgment. This is the balance sheet of assessee. Assessee took some loan of 10,000 crore rupees at the rate of say 10% per month, per annum. And assessee gave some of the money, say 3,000 crore rupees, to its sister concern. Sister concern means subsidiary, etc. So now what assessing officer did you know? How much is the total interest paid by the assessee? Total interest will be 1,000 crore, right? 10% of 10,000 crore. So what assessing officer said to the assessee? That out of this 10,000 crore, you are diverting the funds to sister concern to the extent of 3,000 crore. So proportionate interest, that is 300 crore interest, I will disallow. I will only allow 700 crore. Are you able to understand what I'm trying to say? So the question went to, the assessee went to the Supreme Court and argued in front of the Supreme Court and said that it should be allowed. My question to you all is, should it be allowed or disallowed? Reasoning I want, reasoning. Reasoning I want. You cannot give one answer for this. Please don't give one answer for this. Okay, it can be allowed also, it can be disallowed also. It depends upon all that what that particular sister concern is doing with that money. If I'm giving 300 crore to that sister concern and that sister concern is using that money for the personal purpose of the directors मजे उड़ा रहे उससे, personal purpose, they are roaming around the world with that money, should that still be allowed to the company? So it all depends upon the facts and circumstances of every case. So if you are helping your sister concern because the sister concern is weak enough, they are not getting the money, they are not getting the loan from the market, so I am taking and I am diverting that, and that concern is important for you, and that is also using the money for the purpose of business as a group. As a group, it will benefit you all. Then it will be allowed as deduction. So you cannot say one single answer. Okay. So you can come to this page. That is the next page, and this case law will read it together, beta. Very important case law. Mark this down. Very important case law. Try to remember the name if possible. On which page it is? On page number 3.4 it is. During the assessment proceeding for the AY 9192 and 9293, the assessing officer found that the assessee had advanced huge loan as interest-free loans out of its cash credit in which there was huge debit balance. The assessing officer disallowed the proportionate interest relating to the said amount out of the total interest paid to the bank. Holding that the assessee had diverted its borrowed funds to its sister concern without charging any interest. The expression commercial expediency is an expression of wide import. Wide import means wide importance and includes such expenditure as a prudent businessman incurs for the purpose of business. The expenditure may not have been incurred under any legal obligation, yet it is allowable as business expenditure if it was incurred on the grounds of commercial expediency. If the money was advanced to sister concern on account of commercial expediency मतलब business necessity, business के अंदर वो जरूरी था इसलिए किया है, then the interest on loan shall be allowed as deduction. It is not in every case that the interest on borrowed loan has to be allowed if the assessee advances it to sister concern. It all depends upon the facts and circumstances of the respective cases. For instance, if the directors of the sister concern utilize the amount advanced to it by the assessee for its personal benefit, obviously it cannot be said that such money was advanced as a measure of commercial expediency. However, money can be said to be advanced to sister concern for commercial expediency in many other circumstances, where holding company has a deep interest in its subsidiary and the holding company advances borrowed money to the subsidiary and the same is used by the subsidiary for some business purpose. The holding company would ordinarily be entitled to deductions of interest on its borrowed loan. Therefore, interest on loan advance to sister concern for commercial expediency shall be allowed as deduction. Is it clear to all of you? Please tell me. So you have to see into the facts and circumstances of every case. Let me give you an example of this and then conclude this session. If I want to buy the shares of Reliance Jio, I want to invest in Jio. What shares I am supposed to buy? Which company shares in the stock market? Are you aware of anything about stock market? 200-300 रुपया जेब से निकाल के कभी डालो उसमें. Okay? You will be chartered accountants after a few months. If you are not aware of that, then who will be aware of that? If I want to become a shareholder of Jio, what am I supposed to do? Whose shares am I supposed to purchase? Reliance Industries, right? Is the shares of Reliance Jio separately there in the market? Why not there? Because Reliance Jio is a separate company for your information, which is named as Reliance Infocom. What? Reliance Infocom, which is 100% subsidiary of Reliance Industry. So if you invest in Reliance Industry, indirectly you are a shareholder of Jio also. Because 100% subsidiary of Reliance is Reliance Infocom. So now if Reliance Infocoms want some money, who will give? Reliance only will give. That doesn't mean that Reliance is diverting funds to subsidiary. The holding company has deep interest in that company. And that subsidiary company is a newborn baby that needs help from other entities. And that is the reason Reliance Industry would help that particular subsidiary. Yes or no? What is so wrong in that? What is so wrong in that? The government has to keep its mind open when it comes to deduction of interest on borrowed capital. They cannot be having a strict interpretation over here. They need to be slightly liberal, slightly softened down. so that the assessee should get the benefit of this section. Assessee should get the benefit of this section, because if the assessee will borrow loan, will get benefit, he will be encouraged to do good. That will increase the economy. That will increase the GDP of this economy. Ease of business has to be there in the economy. If ease of business is not there, people will not do business. If people will not do business, then the country will be gone. It will become another Sri Lanka. There will be no employment left. There will be no job creation. Nothing will be left in this country. Therefore, the government has to be slightly liberal in this section, not very strict. Okay. So let's continue the discussion where we left earlier. Pay attention, please, all of you. There is one assessee now who has taken a loan. Pay attention, please, all of you. Very important issue. Who has taken a loan from IDBI Bank, which is a public financial institution. Now, if you take a loan from a public financial institution, then interest is allowed as deduction, subject to 43B. It means interest should be actually paid. Okay. Then only deduction is allowed, because it is written in 43B. What is written in 43B? That interest on loan taken from a public financial institution shall be allowed as deduction on actual payment basis. It is not allowed on accrual basis. It is not allowed on accrual basis. Okay. Now, pay attention, please, all of you. Please pay attention. It's a very important issue for exam. Now, what happened? This loan was for long term. It was for a very long period of time. Now, after a few years, the assessee approached to bank. Listen carefully. Are you listening, beta? After a few years, the assessee approached to the bank for reducing the rate of interest. Assessee said to the bank that please reduce my rate of interest. Bank also agreed, and bank said to the assessee that you make one payment, lump sum prepayment premium of say 10 lakh rupees. You make one payment of 10 lakh rupees lump sum, and we will reduce your interest. Okay. If you want us to reduce your interest, then you should also give us something in return. You pay us 10 lakh rupees as a lump sum premium, and then we will reduce your rate of interest forever. This generally happens in the industry. You know that. I have taken a housing loan from bank, ICICI Bank, the most hopeless bank in this world. Let me tell you, they are not customer friendly. I regret taking loan from them. So ICICI Bank, I have taken a loan. Okay. So every time RBI increases the repo rate, okay, what they do, they increase the rate of interest of my housing loan. But when RBI reduce the repo rate, they do not reduce it. Then I have to go over there. I have to request them, and I have to make some payment as a premium. Then only they reduce it. They don't reduce otherwise. No matter how much. That's the reason I said hopeless bank it is. When it comes to increasing the rate of interest, they will increase. But when it comes to reducing the rate of interest, they will not reduce suo moto. They will wait for the assessees to come and then make a premium payment, and then they will reduce it. This is something which is very wrong. This is the reason why a person takes a floating rate of interest. Otherwise, I would have taken a fixed rate of interest. Why will I take a floating rate? Therefore, pay attention, please. This bank is saying that make a payment of 10 lakh rupees. Assessee made the payment of 10 lakh. Now, what AO is saying? AO is saying I am allowing you this 10 lakhs, but not immediately. But I will allow you over the life of the loan, and say the life of the loan is 10 years. Okay. So AO is saying I will allow this 10 lakhs. AO is not denying the fact that I will not allow. AO is allowing you. But the assessing officer is saying you that I will allow you this over the period of 10 years. But the assessee is saying what? It should be allowed in one time, that is in one shot. The assessee is saying that it should be allowed in one single time, in one shot itself. Did you understand the question? So we are talking about this premium, which is there over here in green. Okay. The assessee, we are talking about this premium. So the issue over here is Very simple. Whether it will be allowed in one shot or whether it will be allowed in 10 installments. The matter went to Delhi High Court in the case of Gujarat Guardian Limited. The name of the assessee is Gujarat Guardian Limited and the relevant court is Delhi High Court. Delhi High Court asked, what is the issue? The assessee explained the issue, even the department explained the issue to the court. And then Delhi High Court asked that whether this lump sum prepayment premium, which the assessee is paying, can this be called as interest? If this can be called as interest, the other person being a public financial institution, then it should be allowed on payment basis because the assessee has paid 10 lakh rupees. Yes or no? If this lump sum prepayment premium can be called as interest, if it is can be called as interest, then it is an interest, and if it is an interest, interest is allowed if it is actually paid, because in 43B it is covered not on accrual basis but on actual payment basis. So I am asking you a question, whether this lump sum prepayment premium which the assessee is paying to IDBI for restructuring its loan, for reducing the rate of interest of its loan, can that be called as what? As an interest? Please tell me. What do you feel? Yes or no? Now you are just answering as per your own wish, whatever is coming to your mind, right? Obviously. But practically what you should think? You should first of all think, is the word interest defined under income tax law? You should think like that. If it is not defined, you can start your fakifying, whatever you want to fakify. But first you should identify whether that term is defined under the income tax law or not. And for your kind information, the term interest, what is defined in 228A? Let us read the definition of interest first. Come here all of you. Page number 3.2 in your color book. Meaning of interest. Section 228A, definition of interest. As per section 228A, interest means interest payable in any manner. Interest means interest payable in any manner in respect of any money borrowed or debt incurred, or includes any service fee or other charge. In respect of money borrowed or debt incurred. Can this lump sum prepayment premium be called as other charges in respect of money borrowed? Therefore, this lump sum prepayment premium, can it be called as interest? And if it is an interest for which the loan is taken from a public financial institution, will this interest be allowed on actual payment? Yes, that is what is written in this particular case. Read this case, please. Gujarat Guardian, mark this case, very important for exam. Very important for exam. Read this case. Is it clear, all of you? Very important issue, mark that down. Now, since we are talking about interest, we should also talk about one more thing which is similar to interest now, which is covered in section 36 subsection 1 clause 3A, which is discount on zero coupon bond. Have you heard this word earlier? Have you heard this word earlier? What happens in this particular thing? Let me tell you. In this thing, what happens? The company issues you bonds. The companies issues you bond at discount. Say 100 rupee bond will be issued to you at 50 rupees. Okay. And it will be redeemed to you at par. At par means it will be redeemed at 100 rupees. Okay. So today is say 1st April 2022. And I am issuing you 1,000 say or 10,000 bonds. Which bonds? Zero coupon bonds. Today the issue value I am issuing at discount. Today the issue value is say 50 rupees. Okay. And the life of the bond is say 5 years. Example. And say after 5 years, that is on 31st of March 2027, it will be redeemed. And at the time of redemption, listen carefully. Suppose the redeemable value comes to 100 rupees. Okay. Yes or no? So today, how much money you are paying to the company? 50 rupees, right? So after 5 years, company will pay you how much? 100 rupees, right? In the meanwhile, company will not pay you anything. Company will not give you any interest on this. That is the reason the name of this bond is what? Zero coupon bond. Coupon means what? Interest, na? Zero interest bond. Zero coupon bond is nothing but zero interest bond. Clear? Now, how much money you will pay today to the company? 50. So company will get 5 lakh rupees today. How much money company will pay you after 5 years? 10 lakhs. So the differential amount is discount given by company. That is the cost to the company. Yes. So that discount will be allowed as deduction. How much discount company is giving? 5 lakhs to you. So that will be allowed as deduction. But how? Over the life of the bond. Over what? Life of the bond. Is everyone clear? Now, so I will divide this 5 lakh with what? That's the mistake we are not supposed to do. Okay? We should not divide this by number of years. The law says that you should divide by number of months. Number of what? So total how many months? 60. Right? Why are you thinking so much? In 5 years there are how many months? 60. Divide by that and compute for every year. Now this is a very simple issue. Listen to a complicated one. I am changing few dates. I am changing this date. I am changing this date. Okay? And suppose this is 13 September 2022. And this is 12 September 2023. Okay? Now from year to year, I have to compute months. How will I compute months from year to year? If you see from year to year, pay attention please, all of you. Pay attention please, all of you. If you go from year to year, and if you see properly and minutely, there are 6 financial years, not 5. I am listing down. First financial year 22-23. Do you agree? Then 23-24, 24-25, 25-26. This should be 27. Sorry for that. 26-27, and then I also have to write 27-28. Yes or no? There are 6 financial year here. First, second, third, fourth, fifth, sixth. Now, if I have to count months from year to year, how will I count the months? Because September 2022 is incomplete, not complete. Shall I consider this or not? And even September 2027 is incomplete. Shall I consider this or not? In my first example, it was starting from 1st April. So I considered the entire month. It was ending on 31st March. So again, I considered the entire month, right or not? But here, I'm starting with September, mid-September and ending in mid-September. Will I consider that or not? For that also, there are provisions, which says that if a month is incomplete and if the bonds are issued for 15 days or more, then you take that month as a complete month. Listen carefully. If the bonds are issued for 15 days or more, if the bonds are issued for 15 days or more, take that as a complete month. So shall I take September 22? Apply your mind in life. Don't see that 13 September is less than 15 days. Listen to my question properly. You have issued the bond on 13 September. So have you issued the bond for 15 days or more or not? So you will count the remaining days in the month. You will not count the first 12 months. Apply your mind. Basic common sense is there. Will you count September 2022 or not? You will count from which date to which date, whether it is 15 days or not. 13 to 30th, na? You will not count from 1 to 12. Okay? Don't make such silly mistakes, beta. So September, October, November, December, Jan, Feb, March. How many days? How many months? 7 months? Now next year full 12 months, 12 months, 12 months, 12 months. And last year how many months? 5 months. Total if you do, it will come to 60 months only. You will divide by 60. Somebody please divide how much it comes to 8,000 something it will come. Okay. This is per month deduction. Okay. You will multiply first year by 8333. Second year 8333. And you will do the calculation. Total will come to 5 lakh. Is everyone clear? This is how you will amortize the zero coupon bond discount. Is everyone clear with this? You can come to textbook. See this example on page number 3.5 fast. A similar example is there. Okay. Now, let us talk about some very important deductions. Very, very, very important deductions. You will find these deductions at so many places in your questions. Shall I start? Shall I start? Now, pay attention on the board, please, all of you. I am talking about certain employers' contribution. Employers' contribution to certain funds for the employees. If an employer contributes for employees, recognized provident fund, etc., then the employer will get deduction under this section subject to 43B. It means you need to make the payment, actually payment, and then only you will get the deduction. Is it clear? I am an employer, you are my employee. If I am opening a recognized provident fund account for you and if I am contributing from my pocket to you, then I will be allowed a deduction on that amount. Is it clear? Second, 3614A. If an employer contributes to an approved, contributes to what? To an approved pension fund of the employee. What? Approved pension fund. I am employer, you are my employee. There is a pension fund which is approved by government and I am contributing some amount in that so that when you retire, you should get some pension. I am taking care of you for your retirement. Okay? So who will get deduction? Employer. Employer is only doing PGBP, na? Employer will get deduction. But there is one condition over here. The contribution should be less than equal to 10% of salary. It should not exceed 10% of salary. If it exceeds 10% of salary, then it will be restricted to 10%. You will not get deduction of more than 10%. And salary for this purpose includes basic salary plus DA. That's it, DA in terms. You might be knowing, you would have done this hopeless chapter in CA inter. That salary for one purpose is different, another purpose is different, third purpose is different. Do you remember that? So salary for the purpose of this particular section is basic salary plus DA in terms, right? So if the salary, that is basic plus DA, is what, say 30 lakhs. How much? And I am contributing 4.5 lakh. How much? Then the deduction would be only 3 lakh rupees. Is it clear to everyone? Very important. These are small adjustments which will accumulate together and become a big question. And let me tell you, the entire paper can go in option. Entire subject can go in option except one chapter, that is PGBP. This is the chapter which cannot go in option because this chapter comes in first question as compulsory question. The first question in exam paper will be PGBP and that is compulsory, and the rest 5 questions are option. You have to select 4 out of 5. It means your entire syllabus you can put in option, but your first question you cannot put in what option. So you have to give your heart and soul for this chapter inside out, because this chapter cannot come in option only. This is mandatory for every student, whether you like or you do not like. But there is nothing like that you do not like in this chapter. There is nothing great in this. It is not rocket science, nahi hai, right or not? Direct tax is not rocket science. It's very easy. But the problem with direct tax is voluminous. It's very big. That is the big issue of this particular subject. The toughness is not an issue. That you will manage in some or the other way by practice. But the volume is an issue. Such a big subject, it is how to handle. Anyways, coming to the third section. Third benefit given by employer, 36(1)(5). Employer is giving contribution to whom? To a approved gratuity fund. Then also it is allowed as deduction. Employer is giving contribution to what? Approved gratuity fund. It can open a gratuity fund for the employee and then it can put some money so that when he retires, he gets some lump sum amount. Yes or no? So all 3 deductions are subject to 43B. Subject to 43B, 43B, 43B. All 3 of them are subject to 43B. You can read this, you can read this, and you can read this also, and you can mark this as an important note because of this 10% salary. This comes in exams lot of time. Let me tell you, this is your base book. This is going to help you like anything. You will thank me like anything that you have concised the entire subject in around 500 pages. With everything in one-stop solution. All the sections, all the case laws, all the issues, everything is written in this book. 36(1)(4), 1(4)A, 1(5). Is it clear? Now I have a question to you all. Pay attention on the board, please. If you know little bit about 43B, I am not expecting anything. Let me tell you very clearly, don't worry about it. But still I am asking you. 43B tells that certain expenditures are allowed on actual payment. By when I am supposed to pay? So that I can get the deduction in the current year. By when? Say I want a deduction in previous year 22-23. By when I should pay? Not March 31st. You should be aware of this much, yaar. You guys said me on the first day that you do tax audit. हाँ काजल बोल बेटा कब तक हो ड्यू डेट ऑफ व्हाट ड्यू डेट ऑफ व्हाट return filing. No. You can make the payment till due date of return filing. Just wait for a second. Okay. You can come to this page, page number 6.12, or you can see from the board if you don't want to open your books. It's okay. 43B. 43B. Can you see this? Point number B, employer contribution by way of provident fund, this fund, gratuity fund, end fund. Yes or no? Is covered in 43B. Is it clear? Now that has to be paid by what? Check here. Due date of filing of return. By when it has to be paid? Till the due date of filing of return. Is it clear? Now keep this page in front of you. It might be helpful for you in some time. Keep this page in front of you, or I will keep the page in front of you. After some time, I will keep this page like this only. I am coming to my note now. See on the board. Suppose there is an employer over here. And there is an employee over here, Mr. A is an employer and Mr. B is an employee. Pay attention, please, all of you. Now, do you know that when he will pay salary to him? Say salary of April paid in 5th May. Okay, we have a practice of paying salary to the next of the following next month, 5th. Okay, generally that is our industry practice. Example. So when you will make the payment of salary to him, do you know that what happens? Say 1 lakh is the salary. So employer will deduct employees PF contribution. This happens or not? Say 5,000 rupees. This happens or not? And he will give him 95,000 rupees. Right? Now what government says, you know, that this amount which you have deducted, on which date he has deducted this amount? 5th May. Okay. So government says what, you know, to the assessee, to the employer, that on 5th May, if this is your P&L account, example, this employee's contribution, baad mein khana kha, is your income. Listen carefully, very important aspect. I am employer, you are my employee, right? I am deducting 5,000. I am Mr. A, you are Mr. B. Just think like that. I am employer, you are my employee. I am deducting from your salary 5,000 rupees, your contribution. So 5,000 rupees your contribution, 5,000 rupees my contribution. Total 10,000 I will pay to the PF account. This is how it runs in the industry, right? So my contribution which I have given, will I get deduction from that in the previous sections? In these sections, I will get the deduction of my contribution, right? And by when I am supposed to pay my contribution, just now I have told you. Till the date of the return, if I pay, then also it's okay. It will be allowed as deduction in the current previous year. Okay? Now, coming to your contribution. Your means employee's contribution. The moment I deduct, the government says that that is your income. That is your income. Whose income? Employer's income. How that can be income, yaar? Government bolti hai कि ये income hai. It's an income. So I will ask where it is written. So is the income defined under income tax law? Is the income defined under? Let us try to understand everything very logically. If you go on by hearting the things, how much you will buy at? Let me know. How much you will buy at particular point of time? Logic will only work. Is the term income defined over here? Yes, you can see over here. You can see on the board if you want. Don't turn the pages. It's okay. Check this point number O. Is that 5,000 talking about point O? Right? So that is my income. Now you will feel that what kind of nonsense the government has done over here. How this can be an income? Don't worry. Everything is absolutely fine. Everything is absolutely correctly done by the government. You have to wait and you have to be patient enough in life. Okay. Now the government says that this is an income. Okay. Make it income. Take tax on this also now. Now government says that don't worry. If you are honest enough, you don't have to worry. If you make the payment of this, am I supposed to make the payment of this to the fund? If you make the payment of this, before the due date of fund, then we will allow this as a deduction to you, don't worry, under 3615A. What is the provident fund due date? To make the payment, you do tax audit, na? First, you might be making an extra also then of PF. Every month's contribution is paid before the due date or not. What is the due date for PF? I know, I want the principal's number today. I want to talk to your principals. What kind of articleship training you are giving to my students? मेरे को आज नंबर फॉरवर्ड कर कहा चलती बात करता हूँ तेरे बॉस से. वेर यू डू आर्टिकलशिप? जस्ट ऐसे ही पूछ रहा हूँ किसी को बात में थोड़ी मुझे क्या करना. Anybody is doing from Big Four? Then you should know, yaar. Big Four people might not know about all these things. They might not know. They are not getting into the day-to-day transactions based audit and all. They are into a specific sector. Say, what is the due date for payment of PF as per the PF laws? Yes, it is. It is 15th of the following month. So, April's contribution has to be made by 15th of May. May's contribution has to be made by 15th of June and so on and so forth. So, if you have deducted this from the salary on 5th of May, right? You have to make the payment by 15th of May. If you make the payment by 15th of May, we will get the deduction. And once you make the payment, can I say this 5,000 and this 5,000 got nullified and it became zero? So, the government is making this income just to make sure that you make the payment on time. Are you able to understand? If you do not make the payment on time, we will not give you this deduction and this 5,000 will become your income forever. This is just to make sure that employee's contribution goes to the government's account very fast as per the due date of the provident fund. Are you able to understand? Suppose if I give 5,000 rupees to Kajal today and I say that, Kajal, please give this to Mr. A who stays in your building. Okay? I will not be able to meet him. So please, can you give him? So she said, yes, I will give him. What is her duty? By when she should give? As soon as possible. Maybe today, maybe tomorrow, right? She cannot take 6 months to give that money, na? The same way the employee is giving with lot of confidence, with lot of faith, his money to the employer, right? So that contribution should be given as soon as possible, as said by you. As per law, what is as soon as possible? 15th of the following month. So remember this thing in mind. Employer own contribution. Employers can be paid till due date of filing of return because that is your own money. But employee's contribution has to be paid by 15th of the following month. For that, you cannot make the payment till due date of filing of return. Did you understand what I said? Because in 3615 over here, 15A over here, it is said that you have to make the payment before the due date mentioned in the relevant fund. You can check this particular section over here, page number 36, 3.6. So please help me. Previous year, 22-23. March 2023, employer contribution. Till when I will pay to, then it is fine. Due date of return of income. What is the due date of return of income? July for some people, September, October for some people, right? And even November for some people for transfer pricing assessees. That we'll see in the chapter of return filing later on. What will be the employee contribution of March? When it should be paid? Till 15th April. If you pay after April, you will not get deduction. And then that 5,000 rupees will be income forever. Yes or no? Is everyone clear, beta? बहुत important है. Very important, these 4 deductions. Mark these 4 deductions as very important for exam in your color book. 1, 2, 3, 4. Okay. Now there is one simple section. Let me address that once. And then I'll go ahead with the important one. 3616. Allowances for animals used for the purpose of business or profession other than stock in trade. Now, if I'm using some animals in my business, not as a stock in trade, I'm not purchasing animal for selling it. If I'm purchasing animal for selling it, then my purchase cost will become my expenditure. Yes or no? And my sales will become my revenue. Is it clear? I am not purchasing the animal for selling it. I am using it my business for other purpose, like an asset. Okay. Why will I use that as an asset? Example, I have dogs in my factory for security purpose. Can it be? Or I have bullock carts for transportation in some rural area, okay, where cars do not go, bus do not go, trucks do not go. Or I have camels to transport something in deserts. Yes or no? So how will I get the deduction of this animal? Listen carefully, animal deduction. Say previous year 20 to 23, I bought a dog. I purchased a dog for security purpose in my factory for 30,000 rupees. Then in the year of purchase, you won't get any deduction. Nothing would be allowed in the year of purchase. Okay. Later on, say in 2025-26, this dog is dead or it has become useless. Okay. Dead or useless. So if it has become dead, we will sell the carcasses of the dog. Carcasses means body, etc. If it is useless, we will sell like this only. I don't want burden in my business. Don't be emotional in life. This is business. Think like businessman. Therefore, whatever sale value I will get, say I got 5,000 rupees from the carcasses of the body of that dog or from the sale of that dog. Then in the year in which the dog become useless or become dead, in that year you will get deduction. How much? Whatever cost you have paid minus whatever is the sale value, differential amount 25,000 is allowed as an allowance to the assessee. You can check the next section 3616. See that please. It will be allowed to in the year of sale. Check over here. Is it clear? Now coming to a very important deduction, that is deduction of bad debts. Shall we start? Pay attention on the board, please, all of you, beta. 3617, which talks about deduction of actual bad debts, not provision for bad debts. Provision for bad debts are not allowed as deduction under the income tax law. It is not allowed. Only actual bad debts. For that, you need to fulfill two conditions. Shall I say? I am explaining with an example. Suppose there is a student who has asked for a credit from me. Example, sir, please give me credit. I will pay you in 2 installments. So I gave him credit. And I wrote his name as credit sales, 10,000. Out of which 5,000 is what? Outstanding. So balance sheet debtors, 5,000. 5,000 he paid. Okay. Shall I go ahead? So I asked him how much credit you want. Okay. So he said, sir, 1 month credit would be sufficient. I will pay you after 1 month. Okay. So I called him after 1 month. Beta, your money is pending, please pay. He said, sir, 1 more month, sir. I called him after 1 more month. He said, sir, 1 more month. I gave him another 1 month. And after that, he stopped receiving the calls. Okay. Then I understood that the money is gone. What shall I do? What shall I do in the next year? This happens in the next year now. This happens in the first year. What shall I do? Or it can happen in the same year also. It doesn't matter. What shall I do? Shall I write off the debt? Now, I do not have time to recover 5,000 rupees. Please. Utna time nahi hai apne paas. It's okay. So I write off this debt as bad debts. Okay. As 5,000 rupees. Clear? Now, the government says that if you want a deduction of this, you need to fulfill 2 conditions. Shall we read those 2 conditions? And then you say, are we fulfilling the 2 conditions over here? First, the debt must be written off as irrecoverable in the books of accounts for the previous year. Are we writing off the debt as irrecoverable in the books of accounts? The answer is yes. Second condition, the debt must be taken into income of the assessee of the year of deduction or earlier previous year. Don't see the exception below. Forget about it. Is the debt taken into income of the assessee earlier? Yes. This is condition 1. Pay attention on the board. This is condition 2. Are you clear? It must be written off in the books of accounts. Yes, it is written off. It must be taken into income earlier. Yes, it is taken into income earlier. Are you clear? You will say, sir, every time it will happen like this only. So what is so unique in this? No, every time it will not be happening like this. Let me explain you, give you an example. Suppose I want a projector for my class. Okay, I want a very specifically designed projector for my class, for example. So what I did, I went to a projector shop who specifically designed projector according to your requirement. Okay. And I said that I want this type of projector. These should be the features in that, etc. He said, give advance. So I gave him advance for projector. Projector is nothing but plant and machinery, right? In the eyes of the law. I gave 30,000 rupees advance to him. Okay. Okay. Now, after giving 30,000 rupees advance to him, he said, come after 1 month. And I showed this advance in the balance sheet as advance. Obviously, I will show this as an advance in the balance sheet, right? So he said me, come after 1 month, sir. So I went after 1 month. After 1 month, when I went to his office, that is to his shop was closed. I went to the adjacent shop, which was beside him, to another shop. I said him, where is this person has gone here? So the other person says me, this person is gone. Now you go home and pass one entry in your books of accounts first. Okay. That P&L account debit to advance written off. Go fast. Since morning, 10 people has come over here whose advance has been forfeited by this person and he has ran away. My money is also gone now. So I am writing this off to P&L and knocking off this advance. Please tell me, am I fulfilling the 2 conditions mentioned in the law? Please tell me, am I fulfilling the 2 conditions mentioned in the law? Why no? Which condition is not fulfilled? It is written off in the books, but it was not taken into income of the assessee earlier. It was not a part of P&L. Yes or no? So what will happen with this, sir? Disallowed. Why? It's a capital loss. Which loss? Capital loss is not allowed as deduction. I'll be speaking about the deduction of losses sometime later. Today is not the right time to discuss the deduction of losses. Let's talk about the deduction of expenses as of now, first of all. And after that, we'll also talk about the deduction of losses. Is it clear? Now, so you have to fulfill the two conditions. Condition 1, write off. Condition 2, it should be taken into debt earlier, income earlier, right? Now, this, the second condition which is there now. What is the second condition, beta? It should be taken into income earlier, right? Now, this can be very dangerous to banking industry and money lending institution. Let me explain you how it can be dangerous to banking industries and money lending institution. Pay attention over here, please. Suppose this is the bank, say SBI, and SBI has given a loan to Malia. Loan to Priya Malia, 10,000 crore. Okay. And Priya Malia is liable to pay interest also. There is an interest receivable of 3,000 crore. Okay. And there is a PNL over here, in which the company, the SBI will show interest receivable as how much? 3,000 crore, right? Now Mr. Malia is gone. Okay. So company is writing off. So how much will be the loss of the company? Will it be only 3,000 crore or 13,000 crore? Array, principal is also the loss for the company, na? The principal is also the loss for the company. So when 13,000 rupees, 13,000 crore will be written off in the books, the AO will say that condition number 1 is fulfilled. That is, it is written off. But AO will ask where the condition number 3 is fulfilled. 3 is fulfilled only for 3,000 crore, not for 10,000 crore. Did you understand what I am trying to say? Because 3,000 crore interest was taken as income earlier. Loan of 10,000 crore was not a part of income, na? So that for that purpose, see, government has given an exception to banking and money lending institution. For them, this condition is not applicable. Exception is there. Are you able to understand, beta? Otherwise, they will be gone. They will be completed forever. They will be liquidated forever. Because for banks, one of the biggest problem is NPAs, right? And if you stop to give deduction of the loan amount and only give the deduction of interest amount, that will be very, very hard to the banking industry. That will be undue hardship on them. Yes or no? Therefore, for bank, there is an exception. Okay. Next. Sir, if I give a credit to someone, listen carefully, like I gave a credit to my student over here. Okay. And if the student is not paying me the money, or if the customer is not paying me the money, so I am writing that off. So am I supposed to prove to the government that I have taken efforts of recovering the money, and after taking all the due efforts, the money is not coming to me, then only I will get the deduction, or I will get the deduction on mere write-off? I am raising two questions. If there is a debt which I feel is bad now, so if I want deduction, am I supposed to prove to the government that how much effort you have taken? Show. How many times you have reminded the assessee? Please show. How many emails you have sent to the assessee? Please show. Will the department will ask you these questions, or they will allow you the moment you write off? Please answer. What do you feel? Therefore, even the Supreme Court has held. Listen carefully over here. Read this particular thing. This TRF limited case law. Case law name is not important, but the content is important. Clear? You are not supposed to prove that your debt has become bad. What are you supposed to do? You are supposed to only write off that debt in the books of accounts. That's it. That is a sufficient requirement to claim deduction. Is everyone clear? Now, next one, you read it just very fast. This section only covers actual bad debts. It does not cover provision for bad debts, as I have said you earlier also. Right? Now listen carefully. There is a company over here, A Limited, who has sold goods on credit. Okay, so there is a debtor in the A Limited's balance sheet of 1 lakh rupees. Okay, now this company gets amalgamated with what? B Limited. So all the debtors etc. goes to B Limited. So now this debtor will become debtor of what? B Limited. 1 lakh rupees. Clear? Now the debtor is not making the payment. Not paying to amalgamated company. Okay. So will the amalgamated company be getting the deduction of bad debts or not? What do you feel? Should the amalgamated company be getting the deduction of bad debts or not? So the Supreme Court held in the case of T. Veerabhadra Rao ke Koteshwara Rao. क्या बोल दिया सर? The Supreme Court held in the case of T. Veerabhadra Rao ke Koteshwara Rao that the debtors of amalgamating company, if becomes bad in the hands of amalgamated company, it shall be allowed as deduction. It will be allowed as deduction. Don't worry. Check over here. It will be allowed. It's a very important case law for exam. Yes, beta. Still it is. That's the reason the court has come into picture. It was not shown as an income of B Limited. I agree. But B Limited has paid for that debtors to A Limited in the form of purchase consideration. Clear? Please tell. Now pay attention, please, all of you. I'll just show you from textbook also. 3617, page number 3.7. The first condition is you should write off the debt as irrecoverable, right? Then it should be taken into account in the income, right? For bank, money lending, business, assessee, there is an exception, right? Then this is something which is pending. I'm speaking about that in a while now. Then this explanation talks about you will get deduction of only bad debts, not provision for bad debts. Check over here. I have summarized everything over here in few words. Clear? Then there is example which I have given you in class. Okay. 41.4 I am keeping on hold because 41.4 is about recovery of bad debts. For that I need to explain you the deemed income section, which I will be explaining later on. Don't worry. Then T. Veerabhadra Rao ke Koteshwara Rao, I have just explained you that if somebody else has sold the goods and you are acquiring that company, that entity, then you will be eligible for that deduction. Don't worry about it. And then TRF Limited, which says that it is not necessary to prove that your debt has become bad. You have to just take the deduction of that. Is it clear? Okay. Okay. Now, there is one proviso which is added by Finance Act 2015. Let us read this proviso. Beautiful proviso it is. Shall I read this? Let's read and see how your mind will blow after this. Provided further that where the amount of such debt or part thereof has been taken into account in computing the income of the assessee of the previous year, in which the amount of such debt or part thereof becomes irrecoverable, or of an earlier previous year on the basis of income computation and disclosure standards notified under subsection 2 of section 175, without recording the same in the accounts, then such debt or part thereof shall be allowed in the previous year in which such debt or part thereof becomes irrecoverable. It shall be deemed that such debt or part thereof has been written off as irrecoverable in the accounts for the purpose of this clause. That how many times they will say such debt or part thereof, such debt or part thereof, such debt or part thereof. How many times are in every line they have said this? This is income tax law at its best. When income tax law becomes best, it becomes best when you read and do not understand what exactly the law wants to tell you. And there you have to get into the inside the section. The previous section, this one, there is nothing great in this section. Allowance for animals, nothing great. When you read, anybody can understand. But when you read this paragraph, you need to have a historical background of the provision. Then only you will appreciate the provision, or else it will become a ratta process for you, which will never be part of our syllabus. Don't worry. Now listen carefully over here. Let us try to understand this particular provision with great clarity. Income tax used to follow earlier accounting standards given by ICAI. Okay. Now, income tax says that we will follow CBDT's own ICDS and not accounting standard. Why so? First of all, let us try to understand why so. This is because, listen carefully, beta. Pay attention over here. I am asking you a fundamental accounting question. Shall I ask you a question even a CA foundation student should be able to answer? Shall I ask you? Now your dignity is at stake, please. You have to think and answer. I have said, I have made it very low. That CA foundation student question it is. Shall I ask you the question? What is the intention of the accounts when it comes to showing of profit? Does accounts wants the people or the accounts, all those who are maintaining the accounts, does accounts wants the company to show high profits or show low profits? Accounting standards are drafted with an intention of showing high profits or low profits. I want an answer from all of you, please. You can think and answer, even though there is nothing great to think in this. Accounts is made, accounting standard Ind AS is made with an intention of showing excessive profit or less profits. Be confident in your answer. Your voice is not that confident, Bhavisha. Less profits? Two people have said less profits. What about the others? Less profits? Kajal? सर अभी सबने बोला है तो मेरा भी वही है सर. Obviously less profits. Why less profits in accounts? Because accounts are reported to shareholders, right? You should not overestimate and tell to shareholders. It is better you show underestimation. I am telling you with simple thing. Simple thing. Forget about accounts. Think about your day-to-day life. Okay? Suppose you want to estimate your expenses and revenues for the next 8 months. Okay? Own expenses and own revenues. While writing the revenue, you will overestimate the revenue or underestimate the revenue. You want to make your expense and income statement your own income, and you go to travel, to train, you go to college, you go to classes, whatever. What you go to friends, you go for lunch, dinner with your friends, you celebrate your birthdays, your friends' birthdays. There might be some cost. You just try to answer me for the next say 1 year. If I tell you, explain, estimate your revenue, you will overestimate or underestimate? You will underestimate. Unnecessarily, if I overestimate, if I do not get that money, then right? You will underestimate your revenue, right? What about your expenses? How will you write your expenses? Underestimate or overestimate? You will slightly overestimate. It means your intention is to show that you will be, let's estimate that your profits will be lower than what you think. Right? The same is the fundamental principle of accounts. When it talks about recognition of revenue, it says that do not recognize revenue unless and until there is a reasonable certainty. Yes or no? At the same time, expenses recognized, they will not stop you to recognize any expense. Recognize as much expense as you want, so that shareholders are not getting wrong information from the company. If the shareholders are having estimated profits are lesser, that is good for shareholder. But no shareholder should get over high profit. Yes or no? That will give him wrong impression of the company and he will unnecessarily invest in that company. If that company does not fetch him the returns, he will blame that company only. Are you able to understand that? Moral of the story is what? Let me conclude this from your side. Moral of the story is what? The profits has to be overestimated or underestimated as per accounts. Show lesser profits. Show lesser revenue, more expense. This is what accounts teach. CBDT बिल्कुल पसंद नहीं है उनको ये चीज. They do not like at all. Why will they like? And how will they like that profit should be lower? Will they like this? Now, when the intention of both are exactly opposite, how same standards can be used at both the place? I don't know whether you got this point or not. CBDT's intention is to show higher profits. Accounts intention is to show lower profits. The intention of both do not match. It is exactly opposite. Forget about matching. Matching is possible when there is something common between two. Nothing is possible to be matched. Everything is going in opposite direction. That's the reason CBDT said we will bring our own ICDS. One of the accounting standard 9, and the relevant Ind AS, I don't know which is the number of that Ind AS. What does it say? Revenue recognition. Account says revenue should not be recognized unless there is a reasonable certainty. Now this is creating problem for CBDT. Because assessee is not recognizing revenue, saying that reasonable certainty is not there. How will I recognize revenue? I cannot pay tax. I don't think so. The customer will pay me the money. And therefore, there is no reasonable certainty. Yes or no? And therefore, I will not book the revenue. I will not book the revenue. I will not pay the tax. Therefore, department said that we will make our own ICDS. And they made some big changes in ICDS. Listen carefully. AS9 accounts. ICDS for tax. And what big changes they have made? Listen carefully. If you sold goods of rupees 1 lakh and there is no reasonable certainty in accounts, what will you do? Do not record. Okay? Okay, beta sabko? Huh? The same is the case with tax. Even tax says the same thing. For goods at least. For what? For goods, tax is same as accounts. For goods. Says do not record. Okay, shall I go ahead? But now if I am providing some service of rupees 1 lakh and there is no reasonable certainty, what does account says? Do not record. Accounts is very conservative, bhai. Do not record. Now what tax says? Listen carefully. Are you all listening? Now I am putting in red. For service, tax says that you have given the service. I said yes. You feel that it will not be recognized? Yes, I feel it will not come. Yeah, it will not come. Record and pay tax. Chalo. Now is accounts differing from tax? Reasonable certainty concept is removed for service. The moment you provide the service, you have to record, forget about reasonable certainty. Now please tell me. I have provided a service of 1 lakh. Now listen, the provision starts from here. Try to understand how logically we have understood this provision. Now try to understand. Provision starts here. 1 lakh rupees I have provided service. No reasonable certainty. Am I supposed to pay tax? Please answer all of you. 1 lakh rupees service I provided. No reasonable certainty. Am I supposed to pay tax? In accounts will I record? Accounts it is not recorded, right? In tax it is recorded and tax is paid, right? So after 1 year, can this become bad also? On which I have paid tax, which is not recorded in accounts. So if it becomes bad, I will require a bad debts deduction because I paid tax on that. And the first condition of bad debts deduction will not be fulfilled by me. What is the first condition of bad debts deduction? Not written off. Read completely. The debt should be written off in the books of accounts. Now tell me, a debt which is not recorded in the books, how will I write off that in the books? It was only recorded in tax. I don't know whether you got this point or not. This yellow portion is only recorded in tax. So it is recorded in tax. You have paid tax. Later on, if it becomes bad, the government says that write off in the books. How will I write off something which is not recorded in the books? So that's the reason the government has made this proviso. You can read this now. That dangerous paragraph. I'll explain you in simple words. Then you can read. Listen carefully. What this proviso says, you know, if there is some debt, listen first in simple words. If there is some debt which is not recorded in books, but recorded as per ICDS in tax. Not recorded as per books, but recorded in ICDS as per tax. And later on, if such debt becomes bad, then it is deemed to be written off in the books of accounts. Are you able to understand? So that your condition number 1 is not violated. Did you understand? Check that provision. Now you will understand why there is so many times they have written the word dead or such dead or part thereof. If you want, you can take a photograph of this paragraph also. This entire discussion, just wait, I'll give you time. This entire discussion is written in the form of analysis over here. Don't worry, you can read that also. Okay? And you can take a photograph of this if you want. Is it clear? You please read this particular paragraph, please. Completely all of you. Okay, shall I go ahead? Now there are certain small deductions, some hopeless deductions. Let's talk about them one by one. And directly, I can also speak directly from summary. All of you come back, beta. Kahan chale jate ho? Come back. Now, this 3619, pay attention, please. 3619. Expenditure on promotion of family planning amongst employees only by companies. Circle. This is the first deduction we have learned so far, which is available only to company, not to firm, not to individual, not to HUF, not to AOPBOI, not to other associates. It is only available to corporate associate, company. Have you heard any other deduction before this which was exclusively available for company? Say, we have not seen that. But I am saying right now itself, this is the first deduction which is available only to company, but not last. But not. It means there will be few more deductions which can come, which is dedicatedly for whom? Companies. At the end, I have made a master chapter for you all. तुम भी क्या याद रखोगे? जाओ, बताता हूं मैं. Just wait. A master chapter for you all. Whatever efforts a student should made, I have not left any compromise in that. I made this interlinking of the entire business and profession chapter. Sections where manufacturing or production will come in the entire chapter. One section we know, that is additional depreciation, right? Sections where company is mentioned. One section we know, that is the current one, right? Now sections where Indian company will come. We have not done any of them so far. Sections where amortization will come. First section we'll read now. Sections where deduction is based on percentage. We have not done any of them as of now. Sections where lock-in is there. You cannot sell an asset for 8 years or 5 years, etc. We have not done these sections now. Sections where new plant and machinery is to be purchased. We have done one section, that is 3212A. Are you able to understand? Okay. We will have a look at this after the chapter ends. It makes more sense at that time. Not now. But now, let us talk about this hopeless section. Promotion of family planning amongst employees. So companies have to do what? Seminar. Seminar for what? That family planning is important. हम दो पूरा गांव हमारा ऐसा अच्छा नहीं लगता है. ठीक है? ठीक है? So that overpopulation is an issue for any country. We are now facing that problem because of overpopulation. Now people have realized in today's generation, right? In today's generation, nobody has more than 2 children. Hardly you will find anybody. But in earlier, you asked to your parents, your grandparents, they didn't have any other work only in life. Everybody would have 4 masa, 3 masi, yes or no? At that time, everybody. Am I joking? Am I saying a lie? It is the truth of this country. Now, all these things have happened because of those people only. The country has been overpopulated. If they have been restricted to 2, there would have been less families, right? Now, because they have been having 8 to 9 to 10 child, there has been 15 families because of that. And it has grown like anything. It has blown out of proportion now. It is out of control of the government now. So this provision is there since 1968. Since 1968, government is trying to promote. So this is happening. So if they would have not promoted, then what would have happened? God only knows. So it is only given to company. What sense does it make to give to company? Company will explain to the employees through a seminar, etc. Okay, they will explain the benefits of family planning, and they will tell company to the employees that don't engage into more children, because that will be a hindrance to the development of the country, and also for your own growth it will be an hindrance. Yes or no? So because the workers and etc. generally employees means the labor class workers, they are not employed enough. They don't know the consequences of having more child later on. So it is the duty of the company. The government said companies are having lakhs of employees under their employment, right? So they can address to lakhs of people in one shot, right or not? So the companies ask that we will give seminars and all. But if the expenditure is incurred for that seminar, then will you give the deduction? The government said yes, we will give you. If you make a revenue expense, then fully allowed. And if you make a capital expenditure, say you purchase some AC, etc., to do that seminar, you purchase the building, You purchase some mic, projector, etc. to do that seminar. If there is a capital expenditure, then it will be allowed 1/5 in 5 installment. Okay, it will not be allowed in one shot. Is it clear? So this deduction, they will deliberately put this deduction on the debit side of a P&L of a partnership firm. What will you do? It will be disallowed. Speak in English. अरे मुझे खुद को नहीं पसंद है इंग्लिश बोलना, सॉरी, बट मेरे को बोलना पड़ रहा है मजबूरी, ठीक है, मुझे नहीं पता मैं कैसी बोल रहा हूं, आई डोंट नो. नाउ capital expenditure 1/5, it will be allowed in 5 equal installment. Again, this is not the last section where the capital expenditure will be allowed in 5 installment. There are many other sections where your expenditure is apportioned over the years. Okay, this is not the last, this is the first one I can say. Now listen carefully. If you find this on the debit side of the P&L of a partnership firm, fully disallowed, right? Only in case of company you allow revenue, then fully allow. If it is capital, then allow 1/5. Okay, in 5 years you will get full, but in 5 equal installments. Now if there is a loss, listen carefully, if there is a loss to the company because of this means what? Capital expenditure will be treated like UAD, another benefit to the assessee. It will be treated like unabsorbed depreciation. What do you mean by this? It means the following, listen carefully beta. Let's suppose this is the P&L of a company. By sales 100 rupees, to expenses 120, to revenue expense of family planning 20, to capital expense of family planning 30, and to depreciation 30. So there will be a total loss of how much? 20 plus 40, 100 rupees loss. Now 100 rupees loss will be segregated how? This will be treated like UAD. This will also be treated like UAD. Are you clear? But this will be treated like a normal what? Business loss. Are you clear? So 40 rupees will be treated like business loss. Will include what? The family planning ka revenue kharcha. And 20 rupees what? Your normal business loss. Okay, is it clear to everyone? That's the reason. You can see over here on the board itself, you may not turn the page. When we were doing the discussion of UAD, you can see in the bracket also I have written UAD ka bracket mein dekho I have written. I have done great interlinking in the entire subject. When you will read the subject at your end after completion now, you will love it. That one provision is how linked to another. Because when you read the second provision, your mind should not forget the first one. You are not doing stock valuation by FIFO method. That first in, first out. जो provision पहले दिमाग में गया वो पहले बाहर निकल गया. It should not be like that. Every provision has to, do you agree to this or not? The entire subject has to be there in your mind on the day of exam, right? So you should learn the subject as a whole now. So you should know the implication of that particular section at different places now. So unabsorbed depreciation. What else can be treated as unabsorbed depreciation? Yes, sir has told me that capital expenditure of family planning is also unabsorbed depreciation. That will also be carried forward till infinity. That will also be carried forward and set off against any income except what? Except salary income. Are you clear? Then there are certain small deductions. Let's go through them one by one and complete the lecture today. Next one, STT, securities transaction tax will be allowed as deduction. Why security transaction tax is imposed? Because you buy shares and sell shares, right? So that is allowed as deduction. Underline, if you are a trader in security, only it is allowed then. If you are not a trader in security, then it is not allowed. In capital gains, you might have done in CA Inter, that STT is not allowed as deduction. In capital gains, it is not allowed. So you and me, if I purchase, listen carefully, if you and me are purchasing shares, we are not purchasing shares like a trader. We are not Junjunwala. Right or not? Junjunwala purchases like a trader. His work, his day-to-day job is what? Buying shares and selling shares. Yes or no? So if Junjunwala sir pays the STT, then it will be allowed as deduction to him under PGBP, but not to us under capital gains. Similarly, CTT is chargeable on commodity transaction tax. You might be knowing there is a commodity which you can buy and sell in the stock market. There is a commodity market also, MCX. Yes or no? So if there is a commodity market, you can sell that commodity, you will get the deduction for that particular tax also. If you are a trader in that commodity again, if you are an investor, then not. Then you can go to capital gains, not here. Okay? Are you revising at home? Good beta, अच्छा रहेगा तुम्हारे लिए. That would be very beneficial. Yes. That's all fine. You revise directly from the color book. That's all fine. If you have any doubt or if you want to have some clarity, then you can go to textbook and revise. Textbook we will do in class itself entirely. Don't worry. Okay. That is for detailed understanding. That is for something what? If after 5 months you open the color book and there is shortcuts over here, you are not able to understand, right? Then what to do? Then you need to have a color book. Then you need to have a detailed book for that, right? Like if you don't understand the concept of deemed building, then what to do? Open the main book, go through the illustration. You will understand the concept of deemed building because there are illustrations attached over there. Yes or no? If you are wise enough, if you are intelligent enough to do everything from color book, everything is covered in color book, nothing else has to be done. Your just 2 books will be sufficient out of the 6 books. Just 2 books. That is your color book and your question bank. That's it. Question bank we have not touched. We will touch after 8 to 10 lectures. After we are done with BGBP. Okay. Just 2 books has to be done. And even more than color book, you have to focus on question bank. I am telling you the priority during exams. Question bank is that important because the most important thing in CA final is application. Student understand everything. Everybody reads and go, but nobody knows how to apply. Application is the most important thing. If a question will come in exam, how to approach, and don't worry, we will do more than 300 questions in class itself. More than 300 questions. We will do last 4 to 5 RTPs. We will do last 4 to 5 mock test papers. We will do last 4 to 5 papers asked by ICI in exam. In last 3-4 lectures, so I will be going to do only that only. So don't worry about all those things. Just follow what we are doing. The content which we are giving, you will not get anywhere. I'm not talking big about myself. You can compare with anybody else. Anyways, next section circle is only for cooperative society, not for anybody else. That too, if a cooperative society is engaged in manufacturing of sugar by purchasing sugar cane. Obviously, by purchasing sugar cane only you will make sugar. You will not make sugar by purchasing wood. Obvious, that is very obvious. So, who is eligible for this deduction? Cooperative society. When they buy sugar to manufacture, when they buy sugar cane to manufacture sugar. So what are they buying? Sugar cane. So government says that they should buy sugar cane at a price equal to or less than the price fixed or approved by central government. So government, the government fix MSP for every product. You should buy that price or lower than that price. You should not go to the black market and buy at higher price. Otherwise, if the assessee needs, it can go to the black market and encourage black market. The government does not want to encourage black market. They are saying that if you want to buy at the rate that we have fixed it, or lesser than that would be fine. Don't buy at a higher price and encourage black market. Is it clear? And one last thing I would like to ask you all. It's a financial management question. Please explain me this term, which I'm writing on the board. All of you, mark to market loss. What is mark to market loss? Okay. Anybody else? Anybody else? At least say don't know. Sir, don't know. Sir, aap hi bata do. Mark to market loss is something where you make, say, investment in some assets. Say you make investment in shares and securities and mutual funds. Does the value of these things changes on a day-to-day basis? Mutual funds value change on day-to-day basis? Sure. Stocks, shares change day-to-day basis? So there is an accounting treatment which you can follow in account, which many big companies also follow. They mark their investments as per market every day. So that is the reason the name of this particular loss or this particular treatment is mark your investment as per market. On a regular basis, that is on a daily basis. Every day recognize gain or loss. So the question is, if I mark my losses or gain as per market, will I get the deduction of that? The CBDT said yes. But you have to do it as per ICDS. If you do not do it as per ICDS, then it will be disallowed. So mark to market loss is allowed as deduction. As per CBDT is ICDS. Whatever they will say in ICDS, you have to do as per that. But they have not put that ICDS in your syllabus. Don't worry. And if you do not do as per ICDS, then it will not be allowed. Okay. You can check over here. As per 36(1)(18), mark to market loss shall be allowed only if such loss is computed in accordance with ICDS. If it is not as per ICDS, then as per 40(a)(13), it is disallowed under the income tax law. It will not be allowed as deduction. Is it clear? Okay. So that's it. This is what this chapter is all about. From tomorrow, we are going to start with a very important part of your PGBP, and that is sector-wise analysis. That part which used to scare you in your CA Inter. That scientific research deduction, 35 AD, hospital, hotel, 2-star hotel, 100-bed hospital. Do you remember all those things? All those things are very important in CA final.